Little more than that on that wage data, losing steam on the wages story in the UK, but it's kind of back up to where it was before that wage data hit. Tom, what do you see on the futures?
European futures pointing at losses between 0.4 and 0.5%. DAX futures pointing lower by around 83 points. Here in the UK, FTSE 100 futures flagging about 33 points of losses, currently pointing lower, a little over 0.4%.
Okay, so the futures picture for Europe is negative. US futures have looked negative for much of this morning and overnight in the Asia session as well. And the Asian equity market story, in particular Hong Kong, has looked pretty negative too. So those are the handover elements we're dealing with here in Europe. The FTSE 100 down by around 0.25% then out of the gates. This is the dollar strength I was talking about, up by 0.4% on that Bloomberg dollar index. And here's the pound weakness. It was this week, even before we got that wage data. So this isn't really reaction to the wage data. We saw it drop further on the back of the wage data, but then it sort of recouped those losses. And we're now back to where we were before the wage data hit. But the wage data, interesting. We'll discuss it further. Losing steam on UK wages in a way that the Bank of England perhaps sees as fitting to some degree with what it wants to see on the UK economy. The French CAC 40 down by 0.6%, as is the Italian FTSE MIB, both of those showing some weakness. All of that anticipated. Then the Spanish IBEX also weaker, down by 0.6%. Looking over at sovereign bonds, we see a bit of divergence here then, not such a clear picture. In terms of the US story, we see the 30-year yield moving higher there, the 30-year UK yield moving higher as well. But actually looking to see if the gilt market really jumps into this sovereign bond column. As I mentioned, the FX market did react to the wage data, but then push back on that reaction, and maybe we're not seeing gilt markets respond too aggressively to it. A quite mixed bag when it comes to commodities as well then, Tom. What do you see on sectors?
Well, across the 12 main sectors that we monitor then, some losses coming through in every single sector. Some of the most pronounced losses coming through for the likes of financial services as a sector, currently down a full percentage point. Energy, interesting as well. Dollar strength, not a help there for oil prices. Energy as a sector currently down 0.8%. Basic resources, we've seen a little bit of pressure coming through for iron ore and copper the last time I checked, and basic resources as a sector is also taking some losses around 0.8%. Again, across the screen, the pressure coming through. Banks also down around between 0.9 and 1% across that sector. Interesting to look ahead to the earnings picture out of the US with Goldman Sachs and Morgan Stanley reporting later today, and the focus really on the investment banking part of the business, whether or not deal flow is going to remain a bit sluggish for those central banks, or those investment banks, I should say. Talking central banks, of course, it is the conversation coming through from the ECB officials kind of pushing back on some of those expectations around the cuts that's been a central focus as well just in the last couple of days. But again, the losses coming through across these sectors. Financial services now down more than 1%, banks down a full 1%, as is energy, basic resources down around 0.9%. It's a bit of pressure coming through across all these sectors. As you look at the benchmark in Europe, down 0.7%. Here in the UK, the FTSE 100 back below 7,600, 7,542, off by 0.7%, Anna.
Okay, so that's the picture on sectors. All looking pretty bleak, isn't it, if you're long with these markets? Sam Unstead joins us from the Markets Today blog to take us through some of the stories they're focused on there. And Sam, let's dive unapologetically into that UK jobs data then, because that was really interesting. Losing steam on the wages story then in the UK to quite a rapid pace, actually, versus history.
Yeah, so quite a rapid pace. I think what you're now seeing, particularly with this jobs data, is until we get to the point where the new methodology is sort of taken, this data is not taken, in all honesty, quite as seriously as it was previously. And so a lot of what you see today, so the slowdown in wages, a little bit of softness across the whole jobs market, has kind of already been priced in, because we've had the REC KPMG survey, we've had profit warnings from Hays and Page Group, big recruitment companies. So a lot of it's already there. And I think the reaction you were seeing, and you were just mentioning, the gilts haven't really moved very much. The pound's pretty much back to where it was. Bets on rate cuts are back to where they were. I think now all the focus goes to inflation tomorrow.
Okay, we've been talking about the politics of the US, but there's also the focus on the politics here in the UK. And it's tempting to look at the polls and think, well, it's a done deal for Labour. But we have a Bloomberg piece talking about just the heavy lift that's needed for Labour to take that win, if that does happen, because of the political arithmetic.
Yeah, I mean, it's an almost historic swing that would be required for sort of Labour to get to exactly where they want to be in terms of majority in Parliament. This is a big part of the story really for the second half of this year. Likelihood is that you're not going to see an election until the second half, maybe later in the second half of the year, and that political risk will sort of get more and more priced in then. I think and this is really part of the reason that there was talk at the beginning of the year they might have an election in May. Very, very unlikely and pretty much off the table entirely, because the Tories are so far back in the polls that they will want to leave it for as long as possible to avoid exactly what we're talking about in that story actually happening.
Okay, let's talk about what's going on in the broader macro space, and some of that takes us to the Eurozone, because we've heard from the ECB recently. Tom and I were just talking about some of the pushback we got over the last 24 hours from ECB officials around the extent to which rate cuts are priced in here in Europe. Bring us up to speed on that. I know this morning we've heard from Villeroy speaking over at Davos, I think, saying that they're not calendar driven. Everybody wants them to, sort of name a date, and of course they won't do that. But he won't even comment on the season in which the ECB will cut rates. So what's the latest news that stood out for you?
Yeah, I think yesterday in particular, we had three separate members of the ECB within about 40 minutes yesterday, all entirely on message. The rate cuts, it's too early to be thinking about rate cuts right now. That pushback that we've seen really from most central banks as those bets have increased. But actually, when you look at the market, you look at where bets are in terms of rate cuts this year, they haven't actually moved all that much. So still at the moment, I think the market, like central banks, is kind of remaining data dependent, but they are keeping themselves on the dovish side.
Yeah, rates, of course, in Europe are currently at 4%, with the markets looking to see rates coming down to 2.4% by the end of this year. Sam Monson, thank you very much indeed, of course, from our Markets Today blog. You can get plenty more from Sam and the rest of the team on the front page of the Bloomberg UK website, or by typing TLIV GO on the terminal. Coming up, we are back at the World Economic Forum in Davos, where we're going to be joined by the CEO of Lloyds Banking Group, Britain's biggest mortgage lender. That conversation is next. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
This is Markets Today. Happy Tuesday. We are 9 minutes into the European trading day. You're seeing losses across the European benchmark of around 0.7%. It is a risk-off session so far in Europe. Let's get back to what's happening, though, on the slopes of Davos, where the World Economic Forum, of course, is continuing. Bloomberg's Francine Lacqua is standing by with a guest. Francine, good morning.
Yeah, good morning to all of our radio listeners. Good morning to all of our TV viewers. I'm here with Charlie Nunn. He's Chief Executive of Lloyds Banking Group. Charlie, thank you so much for braving the early morning to come on air, the freezing Bloomberg studio. You're 2 years into, of course, your strategy for Lloyds Banking Group. How's it going?
It's going well. Obviously, we've had an unexpected 2 years. It's been difficult for our customers, but the economy's been more resilient than we thought may be the case in 2023. And we've been really focused on transforming the bank, but also getting some growth. And we're seeing good growth in the businesses we set out to try and grow for 2024 and 2026. So we're on track.
Yeah, so where are you seeing the most growth? I guess when you look at credit cards, when you look at mortgages, how's the UK consumer doing?
So the UK consumer's had a difficult time, and we all know the cost of living crisis has been difficult, and obviously with higher interest rates, we're still seeing challenges for those people with mortgages who are repricing up to higher levels. But actually the UK consumer and businesses have been really resilient. We haven't seen people defaulting at the kind of scales we've seen in previous cycles. We still see 20% of people really struggling to make ends meet, but adapting, and less than 1% of people really struggling and not being able to make ends meet. So the UK consumer's been adapting well. And we're seeing the growth across Lloyds Banking Group, across our corporate and institutional businesses, as people are looking to invest and for the future and foreign direct investment, for the future growth in infrastructure, all the way through to individuals and households looking to save more and to try and build their financial resilience.
But is that resilience very surprising? Could something go wrong this year, or do you think we're actually over the worst? Because now mortgage rates are meant to start coming down.
Well, we haven't updated our forecasts for 2024 yet. We're doing that at year-end results. But our forward-look view is actually next year, this year, 2024, is probably going to be similar to 2023. Pretty low growth, less than 1% growth. Resilient unemployment, but some growth in unemployment. And house prices slightly negative. So unexciting. I think the challenge for many people is the geopolitical risk and just the election cycle globally, which is creating uncertainty.
Yep.
And so we do think this year is going to be challenging. But within that, there's opportunities to really work with and invest with our customers in different sectors and businesses and to try and invest for the future, which is what we're focused on.
So, Charles, what does that mean for a reduction in mortgage rates for your customer base?
So mortgage rates have already started coming down.
Yeah.
As you know, in the UK, most people look for either a 2 or 5 year mortgage, and that's based off the forward swap curve. And the swap curves have already come down significantly from the peaks that we saw at the half year last year. We don't think the rates will probably come back down to the levels we saw pre-COVID or pre this interest rate cycle, just because of the level of government debt and spending and the state of the economies across the world. So lower mortgages already, and we see that continuing going forward. The good news is that happens before the Bank of England's base rate comes down.
Right. So how does it feel being a UK chief executive at the moment in Davos? There are so many crises that you've mentioned, be it trade, geopolitics, a lot of the concerns out there. The UK election year actually looks pretty stable. Am I wrong?
No, I agree. So as I said, the economy looks resilient. We're going through an election cycle. Always it will be helpful to have clarity for businesses and for people looking to invest into the UK about the future. And we're very focused on working with the government and trying to set that foundation for the future. But the UK economy looks good at the moment. The challenge, as I said, is the uncertainty geopolitically, which would come back on the UK more in second-order consequences through energy prices or the supply chain costs increasing. And so we're watching very carefully as to what's going on in the Middle East, in Ukraine, and then for other elections around the world.
But again, how exactly does that impact you, apart from market swings? And is there anything that you can do to be even more adaptable and adjust?
So the main thing for us is to worry about how imported inflation will impact our customers through 2024 and beyond. We don't think that's an issue at the moment, but obviously the geopolitical instability could create that. On top of that, it's really focusing on the day-to-day issues for our customers. As we were saying, households are still struggling for some parts of society in the UK, and we're seeing people going on to higher mortgage rates, dealing with those high mortgage rates. Businesses have been really resilient, and actually there's some more positive business sentiment in the UK, but cash flows are weaker than they were pre-COVID now, or the same level pre-COVID, and some sectors are stressed. So it's really working with those businesses to make sure they navigate 2024. And then what we're very focused on is we grow Lloyds Banking Group is how do we get the UK investing and driving productivity growth over the next 3 to 5 years.
So in November, you also called on, I guess, the UK government to invest more for the green transition, to give a little bit of a helping hand. Who's listening?
Well, there's two things actually we called for. One is housing in the UK, which is linked actually to the green transition. We've been calling for building 1 million new social homes over the next 10 years. It's really important for the housing market to get more supply. And actually, as we all know, at the moment with higher rates, less houses are being built. And then the second thing is the investment in, as you say, transition technologies and some of the core sectors. We're seeing people listening from foreign direct investors to domestic businesses through to the government thinking about how can we channel more money into those infrastructure projects and create the jobs and the skills for the future, whether it's energy or the built environment or transport, where we're also a leader in financing green transport. So there is real focus on it.
Right, but is it the Tories or Labour? I mean, Labour is still 20 points ahead. We have an election in the next 12 months.
So Lloyds Banking Group's been here for over 300 years. We'll work with the government that's in power. So we're obviously working with all political parties to try and shape the future. And we're working closely with both the Conservatives and the government that we have today, and also making sure that the ideas that we have are available to other parties that want to see them.
So I know you look at, of course, the housing market very, very closely. Are you worried about 2024 for housing, for house prices, and people being able to get on the ladder?
So 2023 was more resilient than we predicted. House prices came down about 2%. We think 2024 will be similar. It's very hard to predict house prices because of the lack of supply that happens. Obviously, on a real basis, house prices have fallen much more significantly, and so we look at that carefully. And in terms of affordability, we're back to about 2017, 2018 levels because people's salaries have increased, but house prices have come down. And that means there should be a bit more resilience, we think, in the housing market. Obviously, how the rates curves evolve, linked to geopolitics, will be an important driver of whether people feel comfortable selling their house or committing to a mortgage, which is, as we know, the biggest purchase in most people's lives.
So what are you most looking forward to in Davos? Is it mainly to do business or?
Meeting clients, understanding what's going on in the broader geopolitical context and trying to make sure we understand what that means for our customers. And then we are heavily investing in digital and tech skills to try and innovate for our customers. And there's a whole set of our partners here that are bringing those ideas to us. So how do we transform the bank? How do we serve our clients better? And then just making sure I'm understanding what's happening in the world.
So when you look at the UK, I think at the end of last year, you also said that you were growing your team in Manchester. How is that going? And how many are you hiring?
In Manchester?
Yeah.
Well, so we've had, actually, Manchester is one location. Yeah. We're actually based in a lot of locations, more than 30 locations across the UK. We've been hiring across a number of locations and then repositioning the teams. The real focus for us at the moment is, as you'd imagine, is around digital and data and tech talent. So we hired over 1,000 digital and data people last year in Manchester, in Edinburgh, in Bristol, in some different locations, in Halifax.
And this is because it's cheaper, or it just makes business sense also to give a little bit more to I guess, hire outside London?
So we've always been based across the whole of the United Kingdom. So we have about 70,000 colleagues, only about 10,000 are in London. So our biggest location is actually Edinburgh. And when we look at the sources of universities and talent and where we can build long-term teams who can really help Britain prosper, help Lloyds prosper, we think building talent across the UK is the best model for us.
Charlie Nunn, thank you so much for joining us. That was the Lloyds Banking Group Chief Executive Officer. With that, I'm going to send it back to you in London. Of course, we'll have plenty more from the World Economic Forum here in Davos. It's only day 2.
Only day 2. Certainly looks chilly. Thanks very much, Francine. Bloomberg's Francine Lacroix at the World Economic Forum in Davos. Of course, she'll be back, as she says, with plenty more conversations from the slopes. Coming up, Donald Trump cruises to victory in the Iowa caucuses, the first test of his status as frontrunner for the Republican nomination for this year's elections. We discuss that next. This is Bloomberg.
will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Continuing coverage this week, only on Bloomberg Television and Radio.
Welcome back. This is Markets Today. We are 21 minutes into the European trading day. It's a risk off across the session. European stocks down 0.7% across the European stock 600. The benchmark, of course, US bonds are selling up, yields selling off. Yields are up, and the dollar is strengthening, up 0.4%. Across your sectors, banks taking the biggest hit here in Europe, currently down around 1.5%. Anna.
So that's the big macro picture. The negatives dominate on the equities side. I've got all the upside, though, here. I've got all the stocks moving higher this morning. A few of them that have been creating news for us. Ocado, the grocery retailer tech business, up by 4.9%, rallying after the grocery business delivered faster sales growth in the fourth quarter than expected. A record Christmas period helped push volumes higher. Analysts have welcomed the numbers there. Moving on to Lindt, that's up by 6%, jumping on a sales beat. Reassuring guidance also coming through from this chocolate maker, of course. And THG up by 4.2%. This the retailer. That after a trading update from that particular business as well, paving the way for strong 2024 cash flow, seems to be the reaction from some of the analysts. Tom?
Okay, on the downside, we have some lines crossing, or have been crossing the last 30 minutes or so, from the likes of Wise, which is largely a money transfer business, digital business, of course, boosting its earnings guidance, seeing up to 44% growth in 2024. But despite that, taking a bit of a hit, currently down as a stock, down a little over 2%, as you can see. We've seen a downgrade as well for Rightmove, of course, the online portal for house sales and rentals, currently down around 5%, a little under 5%. Card Factory also taking a bit of a hit, currently off just under 5 points, off 4.4%. Hugo Boss, of course, within the luxury retail space, also taking a bit of a move lower. Quite significant drop coming through for Hugo Boss, currently down 8.3%. Anna.
Let's just get to some breaking news crossing the Bloomberg terminal coming through from China. China weighing more stimulus with $139 billion of special bonds. And this is really interesting, Tom, on the day after we didn't get a rate cut that the markets in some cases have been anticipating in China, and some making the point that perhaps some monetary policy response to what is a weak inflation picture in the Chinese economy might have helped. But here we have a different type of stimulus being talked about, more stimulus than being considered in China, with $139 billion of special bonds.
Well, it's interesting. This is a playbook they've used before, Chinese officials. They will issue additional spot bonds, particularly around the infrastructure space. But the fact that they're opening this up is interesting. interesting. As you say, the inflationary dynamics in China mean that they do have this ability to do this, ramp up the fiscal spending without having too many concerns about what that will do to pushing up inflation high, given that we've had 3 straight months of deflation in China. Also coming back of the news as well around additional attempts this news coming out this morning, to shore up some of those real estate lenders or real estate companies, with Ping An, one of the biggest lenders in China, outlining a support program there for around 40 to 50 property companies as well. So they are building on these measures. Of course, the question is to what extent it will alleviate the concerns and the downside coming through from this economy. So that's the redhead. China weighing more stimulus with $139 billion of special bonds potential. We'll keep across that story for you.
Okay, now let's move on to US politics. Donald Trump has cruised to victory in the Iowa caucuses, the first test of his status as the frontrunner for the Republican nomination. The former president's margin of victory was more than double the previous record for the caucus.
And I really think this is time now for everybody, our country, to come together. We want to come together, whether it's Republican or Democrat or liberal or conservative. It would be so nice if we could come together and straighten out the world and straighten out the problems and straighten out all of the death and destruction that we're witnessing. That's practically never been like this. It's just so important, and I want to make that a very big part of our message. We're going to come together. It's going to happen soon, too. It's going to happen soon.
Okay, let's get to Bloomberg's Chrissy Gupta, who can walk us through some of the latest detail here. Chrissy, bring us up to speed then. Take us through any surprises at this caucus, not the overall result, perhaps.
Yeah, well, the surprise itself was simply the margin of victory here. We already knew that President Trump was going to be the front runner, 48% margin on the polls. He went over that psychological 50%, so to 51%, which, again, is a record for the GOP in this caucus. But it's the #2 position, that silver medal, that's really been the focus here, because Nikki Haley was largely expected to kind of be the front runner when it comes to that, and potentially down the road, if President Trump holds his kind of gains, maybe even the VP down the road. That really got turned on its head, and that's the surprise that a lot of people woke up to this morning here in Europe and around the world, that Ron DeSantis actually came out in a lead by 21%, Nikki Haley coming in about 19%. But I think the important piece is that people actually braved the weather to do this. Voter turnout at a record low, even worse than in 2016. Some would argue that changed the numbers a bit.
So the focus switches now to New Hampshire next week. Do we see a similar dynamic playing out, or is it a very different landscape?
It is the exact same dynamic, except I think the focus is even more on Nikki Haley now, because she was expected to actually come out at least better than Ron DeSantis, if not by President Trump. In New Hampshire, she is expected to take the lead, even more so than President Trump, because she's appealing to a more urban, college-educated base. However, that was the expectation in Iowa as well, and they chose to actually throw their weight behind President Trump. So the question is, do the New Hampshire voters then really appeal to that fiscal conservative agenda and austerity that Nikki Haley is trying to push?
Okay, Bloomberg's Chrissy Gupta, thank you very much indeed with the latest, of course, on the caucus out of Iowa, looking ahead to New Hampshire next week. Up next, we are back at Davos. We're going to be speaking to one of the CEOs, or the CEO of one of the biggest port operators in the world, DP World. Stay with us for that. This is Bloomberg.
Greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Could face bigger challenges next.
It was going to keep rate World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. Donald Trump cruises past his competition in the Iowa Republican caucus as the party begins choosing his next presidential candidate. Swedish EV battery maker Northvolt secures one of the largest ever green loans amid attempts to boost homegrown European production in the sector. Plus, Bloomberg is live in Davos for the World Economic Forum. We'll be hearing from the Indian Energy Minister and the CEO of DP World shortly. Tom, European equity markets under pressure, higher yields, the stronger dollar, all of that weighing on sentiment, it seems.
Yeah, despite the fact that the Chinese officials, it seems, are weighing up additional fiscal stimulus. We've got reporting on that we will continue to keep across potentially up to $140 billion in terms of new and special sovereign bond issuance as China attempts to put a floor under the slowdown in that economy. But as you say, the pressure is coming across these European stocks. Currently across the benchmark, you're seeing losses of 0.6%. Here in the UK, the FTSE 100, as you can see, back below 7,600, off by 32 points, down 0.4%. Yes, the wage growth has slowed pretty rapidly. You're down from 7.2% on a 3-month basis to 6.6%. There's a little bit of softness coming through from the pound. Gilts and the reaction there across the UK debt markets. Yields actually dropping around 3 basis points at the front end, 4.13. In the German markets, the DAX is currently off by 116 points, down 0.7%. And again, across your sectors, as we flip the board, the biggest loss is coming through from the banking space. In fact, banks down 1.2%, 1.3%. Retail also taking a hit, and Hugo Boss is part of the mix there. Disappointment around the earnings coming through from that retailer listed in Germany. Retail as a sector down more than 1%. A little bit more resilience coming through from media and telecoms, both of those sectors in negative territory by not much, a little under 1/10% for media. US futures, by the way, as markets look to reopen after the national holiday yesterday, currently S&P E-minis pointing lower by 0.5%. And the bonds, US Treasury selling off, yields up 5 basis points on the front end, 4.19 on the US 2-year.
Yeah, stocks losing their nerve a little, perhaps, as those rate cut doubts set in. Let us get back to the World Economic Forum in Davos, where Bloomberg's Francine Lacroix is joined by another guest. Francine.
Yeah, thank you so much, Anna. We're delighted to be joined by Sultan Ahmed bin Sulayem, the DP World Chief Executive. Thank you, sir, for joining us. I mean, you're in a great business, in a tricky business at the moment, because a lot of the attacks and trade, of course, there's a huge focus because of the Houthis. How is that changing your business? Is it hurting?
Let me tell you, our problem is the supply chain. Trade is resilient. People buy and sell, and if they want something, they get it, even in the remote areas. So trade will continue regardless of whatever happens around the world. The supply chain, on the other hand, is very fragile. We tested it during COVID. We tested during the ship stranded in the Suez Canal. 40 hours resulted in 3 months of delays. And now vessels are going around the Cape of Good Hope, trying to avoid this. But these things happen around the world. I mean, we don't see it as a surprise. We expect this to happen around the world in general, no reason really.
But if this lasts for much longer, then of course costs go up. Does it hurt business? So that people say, actually, for the moment it's so expensive, let me hold off. So they only ship the essentials.
Let me tell you, the cost is going to be for everybody. So the shipping line is going to charge more cost, the trader is going to charge more cost, customer will suffer. But I don't believe this will stay for a long time. It's like a bad storm. Sometimes it doesn't stay long, you know. It will eventually end. I don't think this is a long-term thing. It's something that happened. Hopefully it will be away.
But this is a new risk. So let's say in the last 3 to 4 weeks, have you seen it impacting business or nothing?
It impacts the ports in the Red Sea, definitely, because the Far East cargo, some of it doesn't come. Remember, not all the vessels are going around the Cape Good Hope. Others still are sailing through the Red Sea and going, and nothing happened.
So what concerns you the most about supply chains?
Delays, and we are anywhere in the world, so we manage how to deal with the supply chain. We've tested it. We had a good learning lesson during COVID, so we know what to do. We have our own vessels in certain areas where we move cargo. We help our customer to reach their destinations. There'll be delays, of course, if the ship is around the Cape of Good Hope, but things which are going straight, which still is the business and the navigation is still going through the Suez Canal. It hasn't halted. Some opted to go, maybe pressure from the union or whatever, shipping line worry about their seamen, but business is continuing. I don't see this going long term. Yes, it's affecting delays, going to make things costlier.
But when are you expecting for it to go back to normal?
I think it's going to be a long time, in my opinion. I think this is something long term. This is something that happens. We don't like to see it, but this happens, and these things happen. You know, there are a lot of things happen. You know, when the pirates were in the Red Sea, that was a problem also. Eventually, it disappeared. Today, there are 70 naval vessels patrolling. They never had as much as that. So this gives me hope that this is going to be short term.
Are you buying any ports around the world? Are you on the market to buy something?
We go to where our customers are, and wherever they want us to be, we will. And we're building ports like in Congo and many other parts of the world to expand our business.
So where do your customers want to be? There's Hong Kong. Are there other parts of the world where you see growth increasing?
We are in Indonesia. Recently, we acquired a port in Indonesia. So where the customers are, where the cargo, we follow the cargo. That's what we do around the world. And we are good at it because we can, through our logistics connection and synergy with our businesses, we are able to cut not only the cost, but the time it takes to reach a destination.
So what's next? I mean, would you do an acquisition? We were just talking about BlackRock buying a huge infrastructure fund. There's now also a play on infrastructure in the UK this morning with General Atlantic. It's a deal-making space.
It is, but we are not in a shopping spree to buy ports. We are there to provide a facility for our customers. They are the one who drive us. If they need us somewhere, we go. And the customers are the big shipping line and the traders.
So that means yes or no? Are you looking for something this year? Are customers saying
if the customer wants it, we will be there. Believe me, we are proactive.
And so what have they told you so far? I mean, you don't just buy a port like that.
Let me tell you, we do two things. We expand in our port, so we're expanding our port in Canada, for example. We're expanding in many parts of the world to Cape, to cope with cargo. We will be there. Believe me, we are proactive.
And so what have they told you so far? I mean, you don't just buy a port like that.
Let me tell you, we do two things. We expand in our port, so we're expanding our port in Canada, for example. We're expanding in many parts of the world to Cape, to cope with cargo. We're expanding in Brazil. Our port was not busy. Now it is so busy in Brazil. So there are certain areas where we expand, so which is growth internally, and others where we acquire a port if we need to.
Are supply chains looking more inwards? We have a lot of elections this year. We have the U.S. elections. We have India. We have a number of big countries going through elections. If their policies are more inward-looking, what does it mean for port and shipping and infrastructure?
As I mentioned, the trade is resilient. trade will continue no matter what. Even when there are at the heat of problem between China and America, trade continued. It cannot stop. People need something. People want to eat. People want to buy. People want to trade. I expect the world to be more calmer. I expect to see people more cooperating with each other, because that's what is needed. In 2008, that crisis, it was solved because everybody worked together. And we need to repeat it. By working together, we can all win.
Are higher interest rates a real impediment for infrastructure and project development?
It is already factored in our investment. We know it's going to be high, and we're taking measures to deal with it. And from what I hear, it's not going to come down soon.
Okay, thank you so much for joining us. That was Sultan Ahmed bin Sulayem, the DP World Chief Executive Officer. With that, I'm going to send it back to you in London, and of course, we'll have plenty more throughout the day here in Davos.
Okay, great stuff. Bloomberg's Francine Lacroix, of course, on the ground for us in Davos, speaking to the CEO of DP World. Coming up, we are going to be heading back to the World Economic Forum. We're going to be joined by India's Energy Minister. That's a live interview, Hardeep Singh Puri. That is next. This is Bloomberg.
Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money, and number 2, don't forget rule number 1.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Markets Today, 42 minutes into your European trading day. European stocks under pressure today, down 0.4% or so, around 0.5%. In fact, banks, retail, autos and parts, the worst performing sectors today, perhaps losing a little confidence in the rate cutting agenda ahead for this year. That's one of the subjects, of course, up for discussion at the World Economic Forum. The latest edition of the forum, Chief Economist's outlook warns of more uncertainty ahead. Let's get back to Davos now, and Bloomberg's Haslinda Arman is with the guest. Haslinda.
Well, that's right. Let's talk India. Let's talk oil. With me, Hardeep Singh Puri, India's Minister of Petroleum, Natural Gas, Housing and Urban Affairs. Minister, good to have you with us. I want to take you to the Red Sea where tensions are escalating. I'm just wondering, for a country mostly dependent on the imports of oil, how concerned are you about where oil prices are?
Well, whether you are in India or anywhere else in the world,
there's a lot of global commerce which goes through those sea lanes. So there is concern which is understandable, but equally I think there is an understanding of what is happening there. And without wishing to put, a characterization on it, as far as India is concerned, look, 85% of our crude which we use for our refineries is imported. And therefore, keeping the sea lanes open and tension-free, ensuring that they are not vulnerable to this thing is there. But at the same time, we pay for our oil on delivery at the ports, at our ports. So there is a little bit of a cushion there. But I'm confident that given the goodwill around the globe, I don't think anybody wants to see the tensions which are there to be exacerbated and all-out conflict goes through. It's important to keep the sea lanes open, and I'm sure efforts that are being made in that direction will hopefully succeed.
Well, some suggesting that perhaps higher oil is inevitable. Oil hovering at about $80 a barrel right now. Are you comfortable with oil at that level?
No, first of all, I'm a student of history, so this theory about inevitability is not something I easily subscribe to. I mean, things become inevitable because we have failed or somebody has not succeeded in avoiding that happening. Look, oil has been volatile. During the lockdown, it went down to $19, 56 cents a barrel.
Those days are over, though.
No, over, but it goes up and down. Now it's between 70 and 80. I think it was 78 or thereabouts, as far as I know, earlier today. Look, as a line minister, I would want oil to be much cheaper because we are great consumers. And we are today not only the third largest consumer in the world, but 25% of all the increase in demand is going to come from India over the next 20 years. But I think some fascinating things are happening in the market. Cutback in production doesn't necessarily result in prices going up. What happens in the global economy, especially the large consumers, is important. And I think for a country like India, thanks to the Modi policies, we've diversified our sources of supply from 27 a few years ago to 39 now. We have opened up to every possible supplier. And I think the Modi policies have ensured availability, affordability, and sustainability.
In terms of suppliers, that includes Russian oil as well, which you have been imported at a cheaper price. We know currently about a dozen Russian crude cargoes are stuck at your ports, unable to deliver. What is the story there?
Let me first of all tell you about Russian oil. I think the world expressed appreciation somewhat belatedly that we were buying Russian oil. Because if India didn't buy Russian oil, the price of oil would have gone up to 250. So at least privately they used to tell me thank you for buying Russian oil, but they used to say, but buy it cheap. Look, India imports from a large number of sources. And the oil companies, both in the private sector and what we call the public sector, they buy through open tenders from whoever will supply to them at the cheapest. We are buying from Venezuela, we are buying from...
But Minister, what is happening at your Indian ports? Why are Russian crude cargoes stuck there?
No, I'm not aware of any crude cargo stuck. As I said, we buy the oil at the point of delivery. If somebody is not able to deliver them because of restrictions imposed by others, we don't deal with it for a country. If a country is totally under sanction, we would not deal with them. In the Russian case, it's a question of price cap, all right? And it's also a question of some of their shipping entities coming under adverse notice of others. As far as we are concerned, we will buy the oil at the point of delivery. That's one. Secondly, when Russian prices don't conform, we buy from Iraq, we buy from UAE, we buy from Saudi. The Saudi prices also come down. They reduced what is called the Asian premium, I think twice around here.
Indian demand for oil is expected to surge. It is expected to be the third largest economy by 2030. In terms of investments that are needed in LNG, in refineries, I mean, can you give us a sense of how much is needed and, where investments will come from?
Well, first of all, let me tell you, the Indian story is out in the open. We are the world's most populous country now. We have a rate of growth of about 7.2+% in the last 3 quarters. I think then the fourth quarter of the year will also go that way. The predictions for growth in 24, 25 equally are in that range or not higher. These are not predictions I'm making. This is what the international agencies are saying. there will be a demand, and our rate of demand growth is 3 times the global average. So just now we consume 5 million metric tons, 5 million barrels in a day. Linda, you will perhaps be surprised, 60 million people go to the petrol bunk, the retail station every day to fill up, okay? Today, that 5 million barrels will go up to 6, it'll go up to later. But more important, I think we are making a massive transition. We are now 12% biofuel blending we're doing. We had a target of 20% by 2030. We brought that target to 2025. Indian demand for energy, which is also an indicator of the state of the economy, thanks to the Modi ecosystem, which the Prime Minister has put into place, and where the economy is needing more and more energy, that demand is not going to peter off for a while.
But in terms of investment into
the investment is coming in.
Which majors are interested in putting money in
I
India?
just want to tell you, I was coming to that, all the major players.
Such as
Exxon, Chevron, BP, I mean, you name them. There are 5 or 6 only in the world. They're all there in collaboration, etc. Refining capacity. I think that was a specific part of a question which included many subparts. We have 252 million metric tons per annum now. You are taking it up to 400 million metric tons per annum. In the next few years, we will be reaching a 300. We've already got plans. But the rate at which the economy is growing, green hydrogen. Again, India is one of the stories where green hydrogen today, I mean, the companies there, they're already exporting green ammonia to Uniper in Germany, to Singapore for your new GE electricity plant. The green ammonia will come from India. I don't know entirely or in part. So today, we have to ensure, and this is what the Modi pragmatism is, to navigate that route by ensuring availability, affordability, and sustainability.
Minister, always good to have you with us. Great insights there. There you have it, Hardip Singh Puri, Indian Minister of Petroleum, Natural Gas, Housing, and Urban Affairs. Anna, he talks about the transition that India is making. I think we're hearing a lot of that in Davos.
Yeah, Has, great stuff. I'll pick it up from here. Really colourful interview. Thank you for bringing that to us from, of course, the slopes of Davos. And we're going to leave you now with this live panel at Davos, hosted by Bloomberg's Jonathan Ferro, with participants from State Street, the New York Stock Exchange Group, Singapore's Sovereign Wealth Fund, the South African Reserve Bank, and Bridgewater.
Kind of celebration of the policy response. I'll call it a celebration. I think you've all endorsed what we've seen from policymakers. But when we talk about policymakers, aren't we just talking about monetary policy? And Greg, you suggested this, and you brought up the topic of Treasury issuance. What we've seen in Washington, D.C., in the White House, is arguably policy that has worked against the goals of monetary policymakers at times. The budget deficit is part of that story. Michael Semblist over at J.P. Morgan put out a year-ahead piece at the start of this year, and he said the frog is boiling. And he referenced some CPO data that I'll share with you right now. The projections by the early 2030s that all federal government revenues will be consumed by entitlement payments and interest on the federal debt. And as Michael points out, we've become accustomed to deteriorating finances without consequence. What are the consequences?
Yeah, well, I think the only real constraint on policymakers, right? People could look at levels of debt and whatever, but the constraint when the rubber meets the road is inflation and currency weakness. And obviously, that becomes the question: is have we pushed it to the level where the inflation problem is a problem? Otherwise, if you can issue the bonds and you can get the buyers, like if there's not an inflation problem, the Fed could be the buyer. So the limit, which I agree in terms of the frogs boiling, like we are going to press the limit. We're going to find it. There is some limit to the amount of proactive fiscal policy you can make without creating inflation.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the programme. This is Bloomberg Markets Today. Just focusing in on some comments coming through from the Qatari Prime Minister, talking from Davos about what's been going on in the Red Sea, and warning that LNG, liquefied natural gas flows, will be affected by Red Sea escalation. Let's bring in Bloomberg's Middle East Economy and Government Team Leader, Paul Wallace, who joins us now. Paul, so interesting comments coming through from the Qataris about LNG flows being affected, but actually over the last few months, the price of gas, I'm looking at the European benchmark at least, that price has been coming down. What do we make of these comments from Qatar?
Hi, Anna. Yes, as you said, it's not exactly straightforward. We've got this big rise in tensions in the southern Red Sea with all these shipping attacks, and Qatar, according to Bloomberg's analysis, is actually stopping putting its LNG vessels through the waterway at the moment, which on the face of it would be a bit of a problem for Europe, because Qatar is a major supplier of LNG for the continent. Yet gas prices are falling, and in Europe yesterday they fell below 30 euros per megawatt hour. I think with oil and gas markets, they are still fairly relaxed because there is the route around the Cape of Good Hope, the southern tip of Africa. So yes, that means that voyages from the Persian Gulf or Asia to Europe take longer, a week longer or even more, but the route is still open, so supplies are not being halted. But nonetheless, these comments from the Qatari Prime Minister are important. Qatar and other countries in the Persian Gulf, like the likes of Oman and Saudi Arabia, they have spoken a lot about the need to avoid escalating what's happening with the Houthis in Yemen, and some of them were pretty critical of the US and UK airstrikes against Houthi targets over the weekend in Yemen.
Okay, Paul Wallace with the latest out of Dubai. Thank you very much indeed. As you look at European stocks down 0.4%, European gas futures still below that 30 euro level. Plenty more coming up from Davos. Stay with us. This is Bloomberg.
was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally. We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix, live in Davos, and here's what's coming up on today's program. Donald Trump cruises past his rivals in the Iowa Republican caucuses as the party begins choosing its next presidential candidate, while the Davos elite considers a prospect of another Trump presidency. Geopolitics also casting a shadow over Davos as shippers are warned that the Red Sea is too dangerous to navigate after Houthi militants hit a U.S.-owned commercial vessel. And diplomacy also taking center stage here. Ukraine's president arrives in Davos. He says his government is working with Switzerland to hold a high-level peace conference in the Alpine nation. Now, coming up this hour, interviews with the chief executives of the Chinese investment firm Primavera. We have DVF founder and chairman Diane von Furstenberg. But first, we had news last week that Deutsche Bank has been looking at takeover deals with European lenders like Commerzbank and ABN AMRO. Now, it comes as the company explores new ways to boost its valuation. Now, for more on this, we're joined by James von Moltke. He's the CFO of Deutsche Bank. James, thank you so much for joining us. Let's actually start on the economy and what markets are doing, and then maybe you'll give us some news on what you're acquiring. Just kidding. If you want to, we're here. When you look at overall the markets, there's been a mismatch with what we're seeing in the real economy and what markets' expectations for Fed cuts are. Like, where are you on this?
Well, look, my view is it's a bit of a pinch me moment that we've been going through, that the resilience of not just the economies but also financial markets to the geopolitical crises that are going on, to the rise in interest rates and the fight against inflation has been remarkably strong. Whether that continues, I think we're all hopeful, and the overall sentiment for 2024 is positive. And there are lots of good supporting factors for that positive sentiment. But I think the distance traveled so far has been surprising to the upside.
Yeah, what do you worry about in 2024? If we've had a positive year, and actually almost unexpectedly so, 12 months ago we were thinking that a lot of companies would default. What are you seeing in your book?
Well, you went to the right place. So take away the unknowns about geopolitics and all of the elections that are headed ahead. But the rise in rates, there's been a concern that the refinancing wave that would take place, particularly for the most sensitive areas in this regard, and commercial real estate top among those, would be tough. My own view is that whenever you see we're climbing a mountain of refinancings, it tends to get absorbed in the capital markets. I think the rate action since sort of late last year is helpful in that regard, and the overall market sentiment. But we would expect a significant increase in issuance this year as issuers address the refinancing waves that they have ahead.
What if it were to go wrong? Again, why are we so optimistic about the euro?
Well, as I say, we work through it piece by piece, and whether different parts of the segments of the market absorb different elements of what needs to be financed, whether that's bank loans, today the private credit market, and obviously the public markets. I think there is the underlying resilience, strength, appetite to digest what still lies ahead.
How are you worried about the German economy? Again, in technical recession, I don't know whether this is a year where you kind of, the German economy muddles through and gets better.
Well, as you saw, it was very light negative growth last year, which is, of course, disappointing, but it reflects the fact that Germany is going through some relatively significant structural changes as it adapts to the world as it is, as it works through, the vestiges of the energy crisis. We think, of course, and Germany is resilient. Germany has a wide range of strengths that will come to the fore over time, but it'll take a little time. I think 2024 will be one of, again, relatively stagnant growth as Germany works through some of those structural elements. I think there is a policy mix. There are some of these strengths that should come to the fore this year. So we're very optimistic about the second half of 24 and into 25 as we get through some of those challenges.
So what does that mean for Deutsche Bank specifically? I know you're also coming out with your results in 2 weeks, so you can't talk too much in what we've seen so far. But what about 12 months from now?
Well, obviously, we care a lot about the success of our home market. It's the largest part of our business, but because we're international, globally set up, because our business is serving, in particular, our clients' needs as a global house bank globally, and we're exposed, if you like, to all of the trends that are going on, many of which have been quite favorable for our business. So we think there has been a rate-driven benefit to the banking industry in 2023. We don't think that's over, so that as the short-term rate impact, as the pass-through benefits that probably meant in 23 the banks over-earned sort of go into history, the impact of long-term rates and where banks are coming from in terms of negative or very low rates for a long time will be felt over time. We look forward to participating in that, and also a recovery in some of the episodic activity out there, so financial market improvement, and also M&A and financing markets coming back, as I mentioned.
Are you optimistic about bonuses?
Look, it'll reflect performance in 23, and as you've seen in a number of different areas of the investment banking business in particular in 23, it had been a difficult market. I think we and our competitors want to pay for performance and work hard in our managing our incentive compensation structures to do that, and that's something we aim to be consistent on.
But if you look at the business, what's your biggest challenge actually in helping to run it? Is it talent retention? Is it hiring right? Like, what are some of the concerns?
We went through a wave of this war for talent that was particularly present in 22 going into 23. That sort of changed in the last, say, 9 months, which as an employer you see as positive. A slowdown in that turnover and in the very extreme competition for talent is frankly good. But it was also a year, oddly, 23, where a number of competitors like us could reposition our businesses and take advantage of a talent market that was unusually sort of in motion, I would call it, in 23. And that's something that we did through investments, among other things.
And so could that continue? I like the in motion.
I think it would slow down for us. I think we've built the platform to a place where we're very comfortable with how we're positioned. And I think it's important to make sure that the people who join the platform last year get sort of well connected to the Deutsche Bank franchise, to our clients globally, and then go from there.
So there's a lot of talk about who you're buying, whether it's a big company and M&A, and whether it's cross-border.
Well, look, we don't comment generally, as always, on M&A transactions, but what I would say is for a long time we've been proponents of consolidation in the industry. But we've also said that preconditions have to be in place to allow that to happen. As some of the coverage since the article on Friday has pointed out, the preconditions in Europe are quite difficult. across a number of different dimensions. So, we'll continue to watch the space.
Meaning what, valuation is hard, or it's just the visibility of what we're going through economically?
Well, what I'd start with is a lack of a single banking market in Europe, and the ability really to reap the synergies of a banking merger across borders. At the moment, because of essentially the rate movement having created what we refer to as a fair value gap on the bank's balance sheet, there's some strong financial arguments against it, making it difficult to afford from a capital perspective. I think the other thing is, and this is very much sort of where we've been for the past several years, getting the business as it is really fit for competition, fit for the future, is a lot of effort. We've had a very full agenda, I have to say, over the past several years, and continue to have a full agenda at DB.
The markets seem priced to perfection. Is that a worry? What does it mean for volatility and how your traders? Look,
I'd say it depends on the market. I mean, I think credit markets and credit spreads have been unusually strong. We would have expected, given again the recession risks that have been present, the impact on corporate issuers of the rate environment, we might have expected a more difficult credit spread environment. I think equity markets have been quite constructive, but as we all know, relatively concentrated, at least in the S&P. So I wouldn't say price to perfection. I think there's still sort of opportunity for momentum. Yeah. And of course, the rate market has been I think, again, relatively benign, given the potentially persistent inflation that we continue to face in the sort of G20.
So if you look around the world, where are you most optimistic in terms of regions? Is it the U.S.?
Well, look, the U.S. has this remarkable strength in terms of the innovation, the size of its economy, its domestic consumer market. Those are wonderful things. And I think long-term, huge prospects, no question. AI, of course, for us and some of the things we're following, the impact of AI is likely to be quite significant. And of course, there, the United States is a leader. I would call out India as a market that has an extremely strong growth path ahead of it. And one that I have to say, and we as an institution, very excited about.
Yeah, what does AI look like, James, for you? Is it displacement, or is it just freeing bankers to do things that add more value?
I think both. But let me start with, as a CFO, of course, cost-driven AI sort of use cases very close to my heart, and we're finding those, I have to say, and I think that has still a long way to run. The idea that we'll generate enormous efficiencies. But I think next to that, one of the most important things is just sort of the client experience that we can drive through AI. We're seeing it in many of the use cases that we've put to work, and we think that'll continue. And I think the third thing is innovation, particularly in product capabilities.
James, thank you so much for joining us today. That was, of course, James von Moltke, the CFO of Deutsche Bank. Day 2 here in Davos. Now, coming up, we'll also speak to Fred Hu, the chief executive of Primavera Capital Group, one of China's biggest private equity investors. That interview next, live from Davos, and this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Now, Donald Trump has cruised to victory in the Iowa caucuses, cementing his status as a Republican frontrunner. Ron DeSantis finishing a distant second. Now, the former president's margin of victory was more than double the previous record for the caucus.
Importantly, we want to thank the great people of Iowa. Thank you. We love you all. What a turnout, what a crowd. It was a very special night. And this is the first, because the big night is going to be in November when we take back our country.
They threw everything but the kitchen sink at us. They spent almost $50 million attacking us. No one's faced that much all the way just through Iowa. You helped us get a ticket punched out of the Hawkeye State. We have a lot of work to do.
Our campaign is the last best hope of stopping the Trump-Biden nightmare. Thank you, Iowa. We're going to continue on. We're going to make you proud, and we're off to New Hampshire. Thank you very much.
Well, a U.S.-owned merchant vessel has been hit by an anti-ship ballistic missile fired by Houthi fighters in the Red Sea. Yesterday, the U.S. Department of Transportation issued a warning to merchant ships to avoid the area until further notice. Meanwhile, Iran has attacked targets in Iraq and Syria in retaliation for deadly bombing earlier this month. Now, the U.S. has condemned the strikes as reckless. Ukraine's president says there are plans for a high-level peace conference to be held in Switzerland. Volodymyr Zelensky is heading here in Davos for talks, and business and political leaders will meet with him to rally support for his 10-point peace plan. Earlier, the Ukrainian military said it had downed 2 Russian planes near the Sea of Azov, which is controlled by Russian forces. The Kremlin has declined to confirm the reports. We'll have much more from Davos. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop
until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Or other authorities.
Could face bigger challenges next.
It was going to keep rate World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back to our special coverage from Davos. I'm Haslinda. I mean, needless to say, freezing at -14. Now, investors who bet on Chinese stocks in 2023 finished the year largely disappointed as local markets missed out on a global equity rally. But with the sell-off pushing Chinese valuations to near record lows, some investors now see the potential for a rebound this year. I'm joined now by Fred Hu, the founder, chairman, and CEO of Primavera Capital Group, one of China's biggest private equity investors. Fred, good to have you with us.
Great to see you here in Davos.
Will we see a rebound in Chinese assets this year?
I very much hope so, and I think last year, as you pointed out, was a dismal year for the markets and for the economy. Chinese economy definitely underperformed, since the COVID reopening. However, I think the conditions are in place. The economy is going to be much stronger. Fundamentals are going to improve across the board. Above all, policy uncertainty is going to be reduced. Clearly, so that they will pave the way to drive confidence, and on top of the dirty, cheap valuation across the spectrum.
Before we talk about those dirt cheap valuations, I mean, are you then saying that China is back being investable? Because we know when you take a look at foreign funds, they've either cut the exposure to China or made a complete exit from the Chinese market. Are they wrong in doing that?
Well, investors definitely saw a lot of uncertainty. They were puzzled or confused by the mixed messages from policymakers and regulators. They also saw the data, how the economy was doing, disappointing. So this combined together, they were net sellers, for much of the last year. Again, right now we are at the kind of inflection point. There is evidence. The parts of the economy are improving and picking up, and I think, to me, the most important thing is the Chinese leadership has at last, grasped the, reality, understand the gravity of challenges they're facing. So I think, people don't forget, China still has a lot of arsenal, policy arsenal at its disposal, whether it's monetary or fiscal or regulatory.
And we have seen a loosening of those policies, and you're suggesting those policies are helping. What kind of deal flows are we looking at right now?
Well, on the policy solution front, I think China has done a bit, but those policies are, I would say, piecemeal, tentative, and even stingy. So that's why the markets, were still very, very disappointed. So this year, I expect a much more robust policy response to revive confidence and stimulate the economic activity. So in the private markets, I think there's still a healthy deal flow because there are great assets, there are great businesses, there are great companies in China, which are just, overlooked and, and undervalued.
You've remained bullish on Chinese tech, even though in the last 2 years we saw how negative the sentiment has been. Given the depressed valuations, are you adding to your exposure?
to Chinese stocks?
So we have been actively, working to find high quality deals. We have been around for a long time. We have been, there in downturns. We have been there in bull markets. So this is not an exception. So the fact, this is still, 19 trillion US dollar GDP, enormously big, and within the economy there are many exciting companies being formed, and where
like which companies? What's looking attractive? Where are the opportunities?
For example, in climate action, here is a big theme. China has really some of the world-class champions. A company could envision Shanghai-based. They are the best-in-class wind turbine, wind power company. So, playing a critical role in energy transition, not only for China but for the world. So they have really amazing technologies. They have really amazing business model and the ecosystem. So that's a very good example.
I want to talk about your fourth Asia fund, which closed at about $4 billion. How will you be deploying that fund? How much exposure to Chinese-related stocks?
That was quite a time ago. We have been continually looking for deals. So, broadly speaking, we still like consumer-oriented, anything really, tied to the Chinese middle-class consumption. We like energy transition, climate action type of opportunities, and we like, healthcare out of the pandemic. With the middle class, people are much more conscious about health and, extending their lifespan as well as health span. So there's a lot more spending on healthcare and healthcare services. So it's very broad. We're not just trying to focus on one particular sector or industry or one particular. It's enormous in the continental economy.
Fred, you have intimate knowledge of China and its workings. We know that China says it is likely to post that 5% growth target for 2023, but people say there's no momentum. What kind of growth projections are we anticipating for 2024, 2025?
So I don't think it's any stretch, for China to hit somewhere around the 5%. Actually, China has the capacity to outperform that government target, as long as the regulatory policies, the policy stance are aligned with the private sector entrepreneurs, with the investors. The problem with China is that, last couple of years, we have experienced several policy shocks. Some of the actions, by regulators are not fully consistent with the free market, economy. That really, hurt investor confidence. So slowly but surely, the government is doing, doing the course correction.
But people say that the biggest risk for those investing in China is actually Taiwan. Briefly, do you agree?
That's over exaggerated. East Asia has been the most stable, peaceful region, for the last, 50 years.
Fred, I'm sorry, we have to leave it there. Fred Hu, founder, chairman, and CEO of Primavera Capital. Well, coming up, Francine will be joined by fashion designer Diane von Furstenberg. They'll be discussing women in leadership. Keep it here with us. This is Bloomberg.
is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things we have this great connection about the love for baseball, and the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I'll go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money, and number 2, don't forget rule number 1.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Trump cruises past his rivals in the Iowa Republican caucus as the party begins choosing its next presidential candidate. The Davos elite considers the prospect of another Trump presidency. Geopolitics also casting a shadow over Davos as shippers are warned that the Red Sea is too dangerous to navigate after Houthi militants hit a U.S.-owned commercial vessel. And diplomacy also taking center stage here. Ukraine's president arrives in Davos. He says his government is working with Switzerland to hold a high-level peace conference in the Alpine nations. Well, good morning, everyone, and welcome back to our special coverage from Davos. I'm Francine Lacqua. It's day 2. Now, it's been almost 50 years since Diane von Fürstenberg designed her iconic wrap dress, and it remains in demand as ever. Now, the fashion designer is devoting herself to passing on what she's learned over the years and celebrating other women in leadership. Well, Diane von Fürstenberg is with us now. Thank you for joining us. I mean, this is an extremely important conversation about women in leadership, and you've championed women and represented women all of your life.
Well, let's say that I've championed being a woman. And then, I think that when you do it for yourself, then you open the doors for others. And that's what I've tried to do.
Why have you felt the need to come to Davos? We're in 2024. Are women's rights going backwards?
I know. Why have I come to Davos? Because they asked me to come and they asked me to speak. And it's interesting and to see what is going on, and I'm just thinking that maybe now we should kind of exploit the currency of kindness, and maybe we'll start a stock market of kindness.
Do you think that's been lost in recent years? It seems that in politics we're not able to speak to each other anymore.
Well, it's now we are living a moment where everyone is so polarized, and it's a shame because, we are all humans and we have so much more in common than not in common. And I think that it would be nice to kind of focus on that. And, after the me, maybe it should be a little bit more altruism. And but before being able to be altruist, what I tell every woman is that it's important to be true to yourself. And you build your own strength first, and then you attach it with other women.
Do you worry about what we're living through at the moment? Again, you champion women, you have awards, you're also trying to run a business and build the brand. What are some of the pitfalls you see out there?
Well, right now the world is very scary precisely because people are in a state of despair, and therefore, everything is threatening. Climate is threatening. The distribution of wealth is becoming unbearable and unsustainable. So there's a lot of major issues, and the issues are so big that people are afraid, and a lot of and people invest in the fear. And I try to be the opposite, that fear is not an option, and taking responsibility of yourself first, and then carry your own community and create community. But I do believe in survival. I believe in the light. I think we all should look for a little spot of light, build around the light, cherish the light, share the light, because at the end it's always the light that pushes the darkness away.
You're really epitome of glamour chic and New York. How do you think your New York is doing?
Oh, am I New York? Am I New York? I don't know. I was born in Europe. I was born in Belgium. I lived in New York, but I think the world is my home, and what is really my home is that I'm a human being. And I think that what is more important than anything is to honor life. And I think we should all think about honoring life every day. And that may switch a little bit, the selfishness.
You've also built your brands, of course, through the wrap dresses and much more luxury. How do you think the luxury space is going right now?
I think I would, rather than calling luxury, I would try to call it quality. I think that I created, 50 years ago, I created a dress. That dress is still selling. That dress is also selling in vintage stores. So sometimes you may grab one and see that 3 people have worn it, 3 generations. So that's sustainability. So I believe in quality of clothes, but I believe in quality of women, and I celebrate women and the beauty. And for me, the beauty in a woman is eye contact, smile, and body language.
But the quality luxury world has changed since you brought that iconic.
Listen,
there's so much of it now.
I know, and the world is changing so rapidly, and but it's going to change more, and it's going to change faster, and we don't decide all of it. So that's why it's very important for each one individually to put our safety belt on, and our safety belt is being true to ourselves.
Is it changing for the good, or is it changing for the worse, or somewhere in the middle?
I think a lot is changing for the worst, and but I do believe in the good, and I do believe that out of the bad comes out the better, and I trust the young generation, even though I feel sorry for them, that they have so much to deal with, and we have given them that. So the more we can give young kids is to trust themselves.
But this is what climate change, of course. AI, I don't know whether it's geopolitics.
Yes, geopolitics, the wars everywhere, distribution of wealth. It's become unbearable.
Do you think about AI?
Do I think about AI? How can you not? And also, but AI will be, we will each have our own AI friend, our own AI alter ego. The problem with AI is going faster than any human can follow, and what I fear is when it reaches weapons. I don't like weapons.
I mean, not many people do if they're not controlled by humans.
I don't know that not many people like weapons. There's a lot of weapons around.
But does it change the business world? Again, in your world of fashion, I don't know if AI is an enabler or it means job losses, like from a business perspective.
There's job losses, but then we all live in a different way. I don't know, and nobody knows. I mean, I'm friendly with a lot of people in there. Nobody knows. And nobody knows. So all we have to do is, I believe in being good. I believe in kindness. And I think kindness is a currency that we should promote.
Diane, because of your work actually in women in leadership, do you think women in the last 4 to 5 years have found more of a voice because of the Me Too movement, or has COVID gotten that back?
Oh, I don't know. Women, you know, it goes in and it goes back, but women are extraordinary, and women are always about solutions. You know, when they're the most submissive woman in the world, if there's a fire in the house, she's the one who gets the jewelry, the children, and get it out. So I do believe that I do believe that women, in the moment of emergency, in the moment of dangers, women do take over. So there doesn't look like it right now, but eventually.
I was going to say, I mean, this is, you know, one-on-one how to run a business. You want smart people with good instincts that put out fires or save the children, businesses. Do you think there are enough women in business at the moment?
There are women in businesses, but businesses do change, you know. How they operate. I mean, look how much has changed in the last 20 years. And so, you know, the internet just changed everything. I can live with all I need to live is my phone. So I have my AI friend already.
What are you most looking forward to in Davos?
Oh, look at this. Look at where we are, you know. And I think that with all the problems and all the issues and all the inequalities, you come out and you look at the mountain and you look at the sky and you're happy to be human.
Diane von Furstenberg, thank you so much for joining us on Bloomberg TV. Now, coming up, the head of Norway's sovereign wealth fund tells us he's bracing for low returns in the coming years. We'll hear more from Nicolai Tangen, the Norges Bank chief executive, next. This is Bloomberg.
Was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and, you know, any given day it would be the head of a studio, and, you know, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
The chief executive officer of the $1.5 trillion Norwegian Wealth Fund is warning of low returns in the next few years, with inflationary pressures likely to remain. Well, I spoke with him here in Davos about his outlook.
It doesn't look very good, actually, and we are not very optimistic when it comes to returns this year and the next few years, actually. And if we start with rates internationally, I do not see them coming down as fast as many other people. I think we have some underlying inflationary pressures. We've got wages now, wage demand really high in a lot of countries, and so that could lead to some, spiraling of inflation going forward. So. Then you have some climate effects, which are negative on pricing. You have geopolitics, you have trade routes, just a lot of things. It's just not a very happy cocktail.
But do you not see the world changing? So we were talking about the cost of credit, the cost of money, the fact that this is changing also for structural reasons, that it's not only because of the wave of interest rates that we've seen.
Yes, so money is not free anymore, and I don't think it will be for a long period of time. And so, of course, that has implications for companies which have got debt. We are seeing it in the real estate market negatively, and so we are seeing it a lot of places. But probably we've seen the big jump in cost of capital. So from here, it's probably going to normalize a bit going forward.
But if you think that the interest rate cuts are not coming, is it because the U.S. economy is more fragile than we think?
No, I just think there is more underlying inflationary pressure, and I think it's going to stay there for longer. And I do think the international central banks will be very, very careful in cutting rates too quickly because they were too slow in putting them up.
What does that mean for your returns?
Oh, I think they will be lackluster. I think we'll have low returns for the next few years.
That was Nicolai Tangen, the chief executive of the $1.5 trillion Norwegian Sovereign Wealth Fund. Now, the head of Qatar's $450 billion Sovereign Wealth Fund says he's worried about the commercial real estate market, but he'll continue to support London's Canary Wharf project as a long-term shareholder. Well, I spoke to Mansour Al Mahmoud about investment priorities and the global economy.
I think we have been fighting the inflation, and we have been bringing the numbers down. And this year will confirm whether we are, we defeated the inflation or not. I think the market is also anticipating a cut, and there is a different views whether we'll have a big cut, like 6 times. I see this as unrealistic, but I'm sure if the numbers come down, I think we will see a little bit of the cut.
But so when are you expecting, when you look at your priorities for investment this year, what do they look like?
See, priorities are, we are active in all sectors, all the time, all the years. What matters are the themes that we have from year to year. For example, technologies. We are very interested in enterprise software, digitalization, AI. AI is becoming very important technologies. It's a game changer. And we really value businesses that really embedded AI in their business models. Healthcare is a big theme as well. A lot of AI could be used in healthcare. People are very conscious about their health, they are spending on this space. Government are starting to admit that they have not invested in healthcare sector, so a lot of opportunities will come to the surface. On top of this, you have an aging population that I think, science and biology will make sure to bring a lot of technologies and invention.
And I understand, of course, you're a long-term investor. Everything is, further out and takes years. But we have seen some changes in some of your portfolios, including, for example, for Barclays. So does it mean that you would likely to add, for example, to some of the or healthcare companies?
You will see us from time to time exiting or reducing some of the exposure. And this is a normal, activities. I mean, repositioning the portfolio is I think it's a healthy thing in our DNA. We still hold a big stake in Barclays, around 3%, but we are continuing investing in UK and Europe. There is we are not signaling anything out of this.
Which is what I was going to ask you. You're also, of course, very invested in Canary Wharf.
Yes.
Are you concerned about commercial property?
I think commercial properties, yes, because of the leverage and cost of funding. It's becoming, especially if you have debt on some of the, also in the offices space, as I think it has a little bit of risk.
But you would keep it, or is it something that you'd be looking to sell?
No, we are keeping. Again, we are long-term investors. The good things that we have, stable financial capabilities, and we have a strong partner in Canary Wharf. We have agreed that we keep supporting the project, and it is not time to exit it by all means.
When you look at regions, are you more positive on the U.S. than other parts of the world because of the strength of the economy? There are also many uncertainties in terms of division inwards and the elections coming up.
See, the U.S. market is the biggest market for our investment. But nowadays, I see that other equity market might perform better. Japan looks very interesting. Europe looks better, by the way, in terms of the PEs. I think the market is anticipating a big cut, which is unrealistic from my perspective.
Well, that was the Qatar Investment Authority Chief Executive Mansour Al-Mahmoud speaking to us here in Davos. Now, coming up, Donald Trump cruises to victory in the Iowa caucuses, cementing his status as the Republican frontrunner. We'll discuss the latest developments next, and this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Donald Trump has cruised to victory in the Iowa caucuses, cementing his status as the Republican frontrunner. Now, Ron DeSantis finishing a distant second. The result has been watched closely by the global elite here in Davos. Well, joining us now is Bloomberg's executive editor for economics and government, EMEA and Latin America, Flavia Krauss-Jackson. Flavia, so good to speak to you. I mean, there's so much going on in the world of politics, geopolitics, but actually, I don't know if it was a surprise that Trump won by so big in Iowa.
Well, that's the thing. I mean, he defied all expectations, possibly even
on his own, and the man does have an ego, as we know. And the weather was inclement in Iowa. Perhaps the biggest surprise, I think, is that Nikki Haley, who had been touted as like the number 2 and seemed to have caught up with DeSantis, actually sort of trailed. But, with this, the difference, of course, is that the rest of the world is not surprised like it was in 2016. They have had years to prepare. Many of them have hedged their bets, and they have spent time in Washington, not just going to see the Biden in the White House, but also meeting with Trump's entourage. So even before Davos formally started today, Trump was the talk of the town, even though of course he hasn't been here since 2020, and who can forget that moment?
But so does his big win? I mean, is this a template for what he could do in other caucuses? We have New Hampshire, or I don't know if people are now saying, right, that this is it. He's definitely the nomination. And really
right, New Hampshire is going to be really interesting, right? Because the whole slogan of that state is that they're libertarian, they have their own mind, and if Ron DeSantis and Nikki Haley are going to break through, they have to break through there. Once Trump starts gaining momentum, it's game over. And I'm afraid to say that a lot of people that we've spoken to here in Davos, but also officials around the world, and we've really done their homework, as have we, are basically bracing for the very real possibility of Trump 2.0. Now, of course, there are all sorts of surprises. You can't, as Al Gore told you yesterday, it's not a foregone conclusion. But I think the main difference here is now people are prepared. They know what they're going to get. It's more of the same, but really pumping up the volume, right? So nothing's off the table. Will he pull the U.S. out of NATO? Will he throw Zelensky, who's one of the big attendees here, under the bus? Will he, invite Putin, to a G7 or something, or say that he should be part of the G8? Who the hell knows? But that's all very possible.
And so you were just saying, President Zelensky, Ukraine is here. I mean, we have some actually, heavyweight heads of state. I think in all it's 60 heads of government and states, but Zelensky's getting a lot of attention.
Yes, and this, of course, is really important for him because he's seen himself knocked off the news, and we've seen attention on that very big crisis, again, pushed aside given the events in the Middle East, and he's struggled to gain traction. Ukraine is running out of money, and, he's here really, to meet with very important people, like he's just met with Jamie Dimon, of course, who said, God bless, and, really is, trying to sort of lead that reconstruction effort. And, of course, in the afternoon, he's meeting with the likes of von der Leyen and other sort of Western allies. So the idea is that, this is a big push for him.
And some of the most interesting characters, we also have the newly elected Javier Milei of Argentina.
Yes, now I'm sorry to disappoint, he's not bringing the dogs, but he is bringing his sister, and she's going to be sort of also carrying a fairly representational role. Lest we forget, she
has a role in the
She
government?
is a very, very, she's the right-hand woman. They're very close, and, that's a very interesting sort of relationship. He's also meeting with Yurieva, so from the IMF, which will be very important, and he'll be one of the more colorful characters for sure.
And then Chinese premier.
Yes, that's correct.
So we do have, it's an okay turnout.
It's not bad. I know that, we sort of like to say that that's not what it was, but this is, it's back. Zelensky's here. You've got, of course, Macron is here, so that's also going to be very interesting, although we're not quite sure what he's up to, but so I wonder I'm sure he'll make a splash as well.
With all of your years, we almost have to wrap it up, but are they asking for it? Do they want to speak to investors, a lot of these, heads of states, to try and, or is it more for publicity?
I think that the main thing, what I keep getting from people here is that, this is where people don't have their watches, right? So all you need is that one important meeting, that one important contact to have. So
we'll be watching the space. Flavia, no sleep throughout the week. She's sleeping 2 hours a night. She's editing and writing and breaking news. Flavia Krauss-Jackson, they're Bloomberg's executive editor for economics and government, EMEA and Latin America. Now, many more big interviews still ahead, including the NASDAQ chief executive, Adina Friedman, Intel chief executive, Pat Gelsinger, and NATO Secretary General Jens Stoltenberg. But just ahead, our exclusive interview with the central banker of France, François Villeroy de Galhau, governor of the Banque de France and member of the ECB Governing Council. This is Bloomberg Live from Davos.
what do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, a significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
We're live to the World Economic Forum in Davos as leaders from around the world weigh in on global risks. This hour, we'll hear from the ECB Governing Council member and Ukraine's economy minister. Donald Trump wins in Iowa. The former president cruises to victory, cementing his status as a clear Republican frontrunner in the race to the White House.
It would be so nice if we could come together and straighten out the world and straighten out the problems and straighten out all of the death and destruction that we're witnessing.
And more U.S. bank earnings. They roll in. Results from Goldman Sachs, Morgan Stanley today set to reveal a sustained lull in investment banking. Data breaking across the Bloomberg terminal. You knew that Germany was slowing down. Now we have the sentiment index, the ZEW, for expectations bounces to 15.2. That survey was around 11.7, and that is up from the previous reading of 12.8. Now, when it comes to the current situation, that becomes a little bit deeper at negative 77.3. So the expectations, as I say, have improved ever so slightly. So we'll keep an eye on those. You're looking at a number of different issues on the forward. Quick snapshot. There's the euro dollar down by 0.6%. That's driven more by dollar strength rather than euro weakness. The dollar bouncing, as you can see, on the back of a re-rating in the bond market. Again, we're unpicking a little bit of the rally that you saw on Friday at the short end of the curve. The market is still debating whether the Fed has the ammunition to cut in March, and Standard Chartered have said, you know what, we don't think that they're going to do what the market is, but they reckon 4 rate cuts of 25 basis points. The market's optimism on Fed reaction function rather than disinflation. Crude up by 0.1%. It ignores the Iranian hit on the Israeli spy base in Iraq at the moment. Citi warns that there's a lot of extra crude on the float, on the water, as a result of these disturbances in the Red Sea. Danny, good morning.
Good morning, Manus. This is a tough day back for U.S. markets from a holiday. Stocks in the red across the board. TD puts it really well that markets had been ignoring Fed and ECB speak, but all of a sudden yesterday they decided off the back of those hawkish ECB comments to wake up to it. Maybe it is just, as you say, Manus, them unwinding, these markets unwinding the Friday post-PPI trade. So S&P futures down 0.5%. Mike Wilson says that sure, growth is a concern in 2024, but rates are still key. NASDAQ underperforms even more, down 0.7%. We'll have Apple for you on the bottom of your screen that is leading the declines pre-market in big cap tech. That's from a report yesterday that they're cutting the price of iPhones in China by $70. This is the very same concern that Piper Sandler, Jefferies have laid out for why they downgraded the stock. Meanwhile, Hang Seng, that's trading at a November low, down more than 2%. Manus, even despite the fact that China has injected more stimulus, $139 billion worth of special bonds coming their way.
Okay, a lot more supply to come and a supply of news flow at the World Economic Forum in Davos. It's underway. Francine Lecoin is standing by. Francine, good to see you. You have the ECB Governing Council member, Francois Villeroy. Good morning, Francine.
Manus, and good morning, Danny. I'm delighted to be joined by the Banque de France Governor, Mr. Villeroy de Galhau. Thank you, Governor. Good morning, and thank you for joining us.
Good morning, Francine.
I mean, inflation, I have to say, apart from geopolitics, is really the talk of the town. I mean, the number of people I overhear in the corridor saying, will the Fed cut, will the ECB cut? I mean, you tempered quite a lot of expectations in saying, look, it's too early to cry victory against inflation.
Yes, it's too early to cry victory, but when you looked at what monetary policy achieved in the last 12 months, let's say, we can be rather confident. Remember, 1 year ago, the fear here in Davos was that we would have inflation and recession, and we will possibly escape both. So far, we achieved a soft landing with disinflation and a slowing down on activity, but without recession. And there won't be a recession in France or in the euro area this year. So this is why I say that our next move will be a rate cut. Yeah. It will, barring a major surprise or shock, happen this year. But then comes the question of the calendar, which is probably not the most interesting one. Will it happen?
It's pretty interesting, Governor.
No, I know it's a question here in town, in Davos, and will it be in spring, in summer, in fall? This question is open. But may I say why it's not the most relevant one? Because we are not calendar-driven, Francine, we are data-driven. If you allow me, this image, monetary policy is a bit as of a tennis match rather than a soccer one. What do I mean? There is no fixed timing in a tennis match, but there are sets and steps to win. And this is what we are on tracks. Probably a more interesting question is what kind of data do we need to cut rates? Again, we are data-driven.
So because you're data-driven, do you think a cut will have to happen at a time where you actually have new forecasts, or there's some data points?
Perhaps one word about the data we would like to have, or we will look at. We must have the inflation outlook anchored around 2%. I would add solidly and durably. And here I can be somewhat more specific. Solidly means that we look at effective data, including core inflation and including wages. And durably means that we look also at forecasted data, and yes, our forecast, not only our forecast, but also inflation expectations. So this is the outlook we look at, and again, expect very probably a rate cut this year, but the question of the season is a premature one.
But when are you expecting inflation to give you hope that actually it's a downward trend and that it's really, I guess, expectations are anchored to the downside?
I would say that we shouldn't show obstinacy, but also not show haste. What do I mean? About obstinacy, and this is your question, there is this last mile or last kilometer theory. saying that it will be harder to get disinflation in this last kilometer. As we are in Europe, we say kilometer. I don't think so. I don't think so. When you look at the evolution of CPI so far, it has been more or less symmetric. It went upwards very quickly, but it went downwards swiftly. So I don't think the last kilometer will be more difficult by nature, and so monetary policy should not be more rigid in this last kilometer. So no obstinacy, but also no haste. We should be patient enough. And I would say I am at once confident and patient. I'm not complacent. No, this is very important, but this is the right mix of confidence and patience. We are more confident than 1 year ago. Obviously, our monetary policy has achieved much already, but we should remain patient. If not, we could miss the target.
But so this governor gives me the sense that you would do one cut and then want to wait and see where we go after that. Could we only see one cut this year?
No, let us see. Again, it will be data-driven, and this is reasonable. Yeah. We cannot be in a situation where we give a fixed calendar in advance. This would be, by the way, Francine, this would be the comeback of forward guidance, and in a very uncertain world, it's not the right way to proceed.
Is it possible to actually break down why inflation is coming down? So how much of it is thanks to the monetary policy of the ECB and other central banks?
I like your question, because this is a proof we are on the right track. And so we are successful in disinflation, but this question starts to come to say, were we lucky or were we talented?
Yeah. And the answer is?
I would say in our case, you are three facts, hard facts, in favor of monetary policy. So there was an element of luck. But if you look first at core inflation, luck means disinflation in energy prices. But if you look at core inflation, excluding energy and food, it decreased significantly from 5.7%. This was a peak in the URL last spring, to 3.4% in December. So this is also due to monetary policy. Second, probably our main achievement this time was to anchor inflation expectations rather close to 2%. It's a major difference with the 70s, for example. And it's not by chance. It's due to central banks' independence and inflation targeting, which has been extremely efficient. Central banks' credibility has been really tested in this episode and strengthened. And if I can add a third element, I think that this last kilometer or last mile shouldn't be of a different nature.
Governor, what worries you the most, given the geopolitics, that a sudden spike in energy would actually mean that you can't cut? I mean, there's so many of these polycrises that we're watching. What would need to happen for you not to cut at all this year?
I said bearing major surprises or shocks, and we live in a very uncertain world where they can be shocks, and we lived through them in the last 4 years. Obviously, the Middle East is our first focus of attention at present. If I can add another element, this year, 24, will be a very political year in most of advanced economy, with European election in June, the US election in November, an important election elsewhere. So we will look at this geopolitical risk, but you cannot jump to the conclusion. Again, we must be very pragmatic. I don't like this categorization in doves and hopes. I'm a pragmatist.
So you say, jumping ahead of conclusions, which frankly is what the markets have done when it comes to interest rate cuts this year. Does it make your job more difficult for the transmission mechanism?
I said we are not calendar-driven, we are not market-driven either. We incorporate market expectations through the assessment of financial conditions. And they have been quite volatile, if you look at last fall on long-term interest rates, with a strong increase till October and then a significant decrease. So I will not qualify market expectations at present.
But you must look at them.
We are probably a bit more patient.
Okay, so they're getting it wrong.
I wouldn't say it this way, but the volatility of market expectations is much more significant than our long-term view. It's our role, you know, in this very short-termist and volatile and uncertain world to bring some continuity and some patience.
Again, if you look at the Governing Council, there's quite a split on whether wage bargaining is going to be a huge deal for inflation. Are you expecting it to?
As I said, when we look at data, it will be about actual data and about forecast. Among actual data, wages play a significant role. It's not mostly the case in France, by the way, where wage negotiations are showing a deceleration of the nominal increase, and we will have a real increase of wages, which will help consumption and growth, but we think we are on the right way. In other countries, wage increase can be more significant, and it plays a significant role for services inflation. But again, the trend is labor market which are less tight, and so it can belong to our confidence. But we will look.
And Governor, thank you so much for your time today. That was the Banque de France Governor and ECB Governing Council member François Villeroy de Gallo. So with that, I'm going to send it back to you in London, Danny, and we'll have plenty more here from Davos throughout the day.
Francine, thank you so much. Really looking forward to it. Fascinating to hear Villeroy talk about a rate cut this year when, of course, yesterday Holtzman talking to France said, hey, you shouldn't count on one this year at all. Stay with us this week. We're going to bring you more interviews live from the World Economic Forum in Davos. And don't miss our conversation with the Ukraine economy minister later in this hour. Okay, let's get some of the other top stories, Manus, that are trending on the terminal this morning. China is weighing more stimulus through a special sovereign bond plan. The plan would see new debt issuance of $139 billion. Sales of such bonds are rare and would only be the fourth of its kind in the past 26 years as authorities boost efforts to shore up the economy.
Former President Donald Trump won the Republican caucuses in Iowa. That was widely expected. Ron DeSantis finished a distant second. Nikki Haley finished in third, while Vivek Ramaswamy suspended his campaign. We'll be live to Des Moines later this hour.
And Elon Musk says he would prefer to have greater control of Tesla before building out its AI and robotics capabilities. In a post on his social media site X, Musk said that he would be uncomfortable growing the automaker into an AI leader without at least 25% of voting rights. Musk currently owns about 12% of Tesla stock. Manus.
Apple will remove the blood oxygen feature from its latest watches. Now, this is to get around the US ban if its appeal in the patent infringement case fails. The plan was disclosed by Massimo, which has been locked in a feud with Apple over the technology. Coming up, we're going to review these markets. Bano Baveja of UBS anticipates a recession in the US this year. We'll catch up with Bano in just a moment, right here on Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere.
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but Technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It doesn't look very good, actually, and we are optimistic when it comes to returns this year and the next few years, actually. And if we start with rates internationally, I do not see them coming down as fast as many other people. I think we have some underlying inflationary pressures. We got wages now, wage demand really high in a lot of countries, and so that could lead to some, spiraling of inflation going forward.
That was a Norway wealth fund CEO speaking to Bloomberg's Francine Lacroix in Davos just 24 hours ago. Bana Voyager is the chief strategist at UBS. It's interesting, if you listen to the very last statement of that, spiraling of inflation going forward, and he doesn't see any significant returns. Now, you take the other side of this trade. You see elegant disinflation supporting risk assets. One of you is materially wrong.
It's strange that we actually reached the same conclusion. We don't think returns are going to be spectacular, but for different reasoning. So I do think there will be disinflation, Manus, but not elegant disinflation. In fact, we are actively arguing against elegant disinflation. We're saying this disinflation. So 2013 was elegant disinflation. Let's just put sort of clarity around what elegant disinflation is. Elegant disinflation is vol dying and markets rallying at the same time as the economy is disinflating. That was 2023. That was a year driven by better supply. 2024, we think, is going to be a year where demand, particularly in the U.S. economy, gets compromised. That's not elegant. So you do get disinflation. So we think inflation will actually come lower, risk-free rates will come lower, but in the context of risk premia that widen. That's very different from what we saw at the beginning of 2023, or indeed from the beginning of any year that saw very strong equity returns.
Right, because you write that this idea that the elegant disinflation supporting risk assets, we need to unlearn that. And I know as part of your argument, you also talk about the reason why you're not excited about rate cuts, that the real concern is that lagged effect, that even if we're getting rate cuts, what's going to hurt us are the rate hikes from 2022 and 2023. We have this debate all the time. When does the Fed cut? How much do they cut? I mean, is this the wrong debate? Does it even matter? Are we going to have a recession regardless?
I think we are going to have a recession because, even if the Fed, let's say the Fed starts cutting in March, which is a little bit early. We think it's more likely that it comes March to May. But even if the Fed starts cutting in March, sort of the lagged impact, because monetary policy, particularly in the U.S., less so in Sweden, less so in Australia, but particularly in the U.S., monetary policy lags have become so much longer because so much debt was termed out that you're still going to get for the next year and a half, 2 years, the net interest expense of corporates, the net interest expense of the consumer is likely to continue to go up. And that's likely to mean that you get this demand pull, you get demand coming lower, and that will mean lower earnings, and that will mean lower PCE, particularly for the consumer. It'll mean lower PCE. The other quick point is that, and let's put some numbers to this, if we are right, U.S. Treasuries rally about 60 to 70 basis points from here. But if the economy slows down, which is in our mind very plausible, very likely, then high-yield credit spreads widen about 200 basis points. So net, despite the risk-free rate coming down, despite the Fed being dovish, your cost of equity is actually going up, not down. right? So you don't get that much help from valuations. That's what I think the market's missing. They're just looking at the world from a Fed perspective, which is what it has been very successful for the last 15 years. Just Fed turns dovish, you buy the market. But usually the Fed has turned dovish at a time when there's been a fire to fight. Today, risk premia are extremely compressed. There is no fire to fight. You know, VIX is at 12. High yield spreads are at 340. Very different from a normal Fed pivot.
And we've just listened to the ECB's de Gallo. Obviously, Holzman was on yesterday. De Gallo has just been with Francine there now. He says, you know, he's not, it's a game of tennis, as he says, and not soccer. So he doesn't want to be obstructionist in terms of rate cuts. And it's interesting, he says we were lucky with energy prices coming down. And this is one theme that you touch on. And I think it was very candid by de Gallo to say that, look, we were lucky, energy prices came off, but he says inflation expectations are well anchored, unlike the 70s. Do you agree with him?
I do, yes. Inflation expectations have, in fact, this is the one thing that you remember last year, or in fact now year before last, Schnabel had spoken about it. And so Schnabel is sort of one of the most important members of that board and had said that, look, if inflation expectations begin to get disanchored, and we were in the very early stages of that, we will do whatever it takes, which basically means, including a recession, if it costs us a recession, so be it, to bring down those inflation expectations back. And one of the variables that really does drive inflation expectations is energy prices. At that time, you know, we were worried about nat gas prices going to 300 euro to euro per megawatt hour. Today they're trading 30, right? So 10% of what that fear was. And that lower energy price really has meant that five-year inflation expectations, which the ECB watches very, very carefully, have begun to come off. They're still not at 10-year averages like they already are in the US. So in the US, you're pricing in disinflation. In Europe, you could price in a little bit more, but I think the ECB is going to be more careful than the Fed. So it's not all central banks being very aggressive in their rate cuts. We think the Fed is going to be quite aggressive in its rate cuts because the US economy has been exceptional. The European economy hasn't been exceptional, and real rates are not that high.
Right.
So the ECB is going to lag, we think.
Yeah, so the U.S. has more room with those real rates. You write that fiscal policy matters. We're in the middle of an election year. We learned that last night with Trump handily winning Iowa. But there's also this thread in the background of Democrats and Republicans negotiating tax cuts together for this year. Is there a concern that this will bring another bout of fiscal easing if there are things like tax cuts still coming for us this year?
Look, our base case is that, in fact, fiscal policy is going to be hurting the markets this year. So last year you saw fiscal impulse about of 1% of GDP, impulse being the second derivative of fiscal spending, so the change in the fiscal deficit, which is what matters for growth, right? So it's the second derivative that matters. And last year was extremely helpful, and this year, us, the IMF, the Brookings Institute, everyone does believe that even with some tax cuts, you are likely to see the fiscal impulse being negative. The question is, the market may not consider what's going to happen this year, but if you do get an election result where you get Republican Congress and a Republican president, there is a possibility that you start worrying about the fiscal impulse being super positive, or celebrating, indeed, fiscal impulse being super positive in 2025, more likely 2026. So you could get that reaction. Most of the investors that I speak to are thinking about this year's, in terms of the election cycle, very similar to 2016. I think that's the wrong view. I think it's incorrect because you're in a very different state on public debt, on bond supply. So I think that if we get similar results, you could get the bond market not enjoying that, and equities will take cue from rates.
How soon does the market really whip itself into a political frenzy and a debt frenzy casting forward? I mean, if we look at how well Trump did in Iowa, I mean, it was an exceptional beat of his peers. When do bond markets begin to really think about fiscal risk from a Republican success story or leadership story, as you say, of the presidency and of the House?
Yeah, so look, I mean, we've seen Iowa went pretty much as expected, maybe a little bit better for Trump. New Hampshire is going to be a little more tough. But in general, it looks like he's going to do well through the primaries, right? So I don't think it'll be a very big surprise for the market if he does get the nomination. So that's why I don't particularly expect a massive reaction. There should be some reaction in June, but not a massive reaction around the middle of the year. I think the bulk of the reaction would be around and post the election. So that's when the market, I think, is going to react. So some reaction mid-year, but most of the reaction in Q4 in November.
Okay, Bhanu, thank you very much for joining us this morning. An exciting year you've set us up for. That's Bhanu Boweja of of UBS. Okay, quick check on your currency markets this morning. The dollar is trading at a 1-month high. The euro is dropping for its 4th consecutive day as this market starts to undo some of that pricing we saw in February post PPI. Manus.
Yep, just a quick name correction there. Of course, it was François Villeroy du Gallo of the Banque de France. Coming up, we're going to talk about the bank earnings ahead today.
cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the celebrity beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
So
destinations.
functional.
Exactly, value fractional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take to
How
do?
about the Instagram? Can you speak about that?
I can imagine.
Instagram moment with the sunset, having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to Bloomberg Brief. I'm Menace Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. We're live at the World Economic Forum in Davos this week as leaders from around the world weigh global risks. Earlier this hour, we heard from ECB Governing Council member Villeroy, who told us a rate cut is very probable, but the exact timing will depend on data. Donald Trump wins in Iowa. The former president cruises to victory, cementing his status as the clear Republican frontrunner in the race to the White House. And more U.S. bank earnings roll in. We'll get results from Goldman and Morgan Stanley today to reveal a sustained lull in investment banking. A tough first day of trading for U.S. markets. S&P 500 futures down about 0.6%. It is this unwind from the euphoria on Friday. The PPI came in and we started to price further cuts. That's undoing itself. We were just speaking with Banu Buweja of UBS, who says we need to unlearn that this immaculate disinflation is going to be helping risk assets. That's not the case. NASDAQ underperforms, down 0.8%. We talked a little bit about the woes of Apple, them changing their smartwatch. The thing that seems to be carrying prices lower for Apple this morning, it was a report yesterday that they're lowering the price for their iPhones in China. Those shares down nearly 2%. Meanwhile, the Hang Seng down 2%, closing at a November low. Manus, this market is so unloved. Even though you have strategists like JP Morgan and BlackRock saying saying that it's so cheap, you got to buy something, even though we have more stimulus, more planned special bonds coming from China. Manus, no one wants to buy this market. It's just perennially unloved.
Yeah, I mean, it's a lack of belief in the ability to deliver. And by the way, that stimulus, those bonds that they're issuing, they've only done that 4 times historically. The Asian financial crisis and the pandemic, etc. When it comes to belief of where the bond market is going, I think Banu had a very interesting point, which is about risk premia. He does see in a situation, bond markets, let's have a look at those. Of course, the debate, we're debating constantly, does the Fed have the ammunition to pull the trigger and to cut rates in March? And to that extent, that was the narrative on Friday. Today, you're seeing yields rise ever so slightly. The narrative today is that it was Holtzman and a host of ECB members that were pushing back against the timing of rate cuts that caused the bond market to turn a little bit higher. I'm very much doubting that. I think this is just a little bit of a reality check that we perhaps were over-exuberant on the back of the PPI on Friday. You're going to get a monster amount of supply. $100 billion has come down the pike so far. $30 billion of bonds will be delivered by the banks over the rest of the week. And we'll hear from Christopher Waller later today. Crude is up 0.9%, as you see the oil market again sort of batting away those Houthi attacks. Perhaps the bigger issue is the hedge funds are piling in here. They are net long at the highest level in 4 months. So the subplot in the oil market is the hedge funds are building up for a tighter and higher market. The dollar is up. We're risk off slightly with the equities, as you saw there, Danny. The dollar is higher this morning. We're at a 1-month high again. Yields pop a little bit higher. We're risk off around the world. And so you just see this haven status in the dollar. Danny.
I found Banu's conversation very fascinating about this idea that even if we're going to be cutting rates in March, Manus, that we're still heading for recession because there's still more stress coming down the pipe of the delayed effects of tightening, that even if rates are cut, high yield spreads are going to widen. So your cost of capital is more, Manus. In that environment, risk still can't do well.
Yeah, I mean, he talked about the potential for those bonds to rally by about 60 basis points. But when it comes to high yield and those slightly more risk areas, he said spreads could blow out by another 200 basis points. Danny.
Yeah, exactly. And look, a lot about this global economy, the outlook for it, a lot of that is being debated at Davos right now. 2024 is taking shape, and leaders there are discussing not just the outlook, but of course the challenges ahead. Bloomberg's Francine Lacqua spoke on that with the CFO of Deutsche Bank earlier.
The resilience of not just the economies, but also financial markets, to the geopolitical crises that are going on, to the rise in interest rates and the fight against inflation, has been remarkably strong. Whether that continues, I think we're all hopeful, and the overall sentiment for 2024 is positive. And there are lots of good supporting factors for that positive sentiment. But I think the distance traveled so far has been surprising to the upside.
Yeah, what do you worry about in 2024? If we've had a positive year, and actually almost unexpectedly so, 12 months ago we were thinking that a lot of companies would default. What are you seeing in your book?
Well, you went to the right place. So take away the unknowns about geopolitics and all of the elections that are headed ahead. But the rise in rates, there's been a concern that the refinancing wave that would take place, particularly for the most sensitive areas in this regard, and commercial real estate top among those, would be tough. My own view is that whenever you see we're climbing a mountain of refinancings, it tends to get absorbed in the capital markets. I think the rate action since sort of late last year is helpful in that regard, and the overall market sentiment. But we would expect a significant increase in issuance this year as issuers address the refinancing waves that they have ahead.
What if it were to go wrong? Again, why are we so optimistic about the year ahead?
Well, as I say, we work through it piece by piece, and whether different parts of the segments of the market absorb different elements of what needs to be financed, whether that's bank loans, today the private credit market, and obviously the public markets. I think there is the underlying resilience, strength, appetite to digest what still lies ahead.
How are you worried about the German economy? Again, in technical recession, I don't know whether this is a year where you kind of, the German economy muddles through and gets better.
Well, as you saw, it was very light negative growth last year, which is, of course, disappointing. But it reflects the fact that Germany is going through some relatively significant structural changes as it adapts to the world as it is, as it works through the vestiges of the energy crisis. We think, of course, and Germany is resilient. Germany has a wide range of strengths that will come to the fore over time, but it'll take a little time. I think 2024 will be one of, again, relatively stagnant growth as Germany works through some of those structural elements.
The CFO of Deutsche Bank, James von Moltke, speaking in Davos. Let's now switch gears to U.S. banks. Joining us for more is Octavio Morenzi, CEO and co-founder of Opima. So, Octavio, we get Goldman Sachs, Morgan Stanley, all before the market bell opens today. You write that usually the big banks have earnings that move quite closely with each other, but last quarter was the big exception. So, Octavio, I ask you, can you be a winner this quarter unless you start with a J, a P, and an M?
Well, listen, they certainly were the big winner. They had a blowout year, a really good quarter. But some of the other things were not bad either. So if you look at someone like Wells Fargo, I thought it was quite impressive what they were able to build up. They basically had a very, very small increase in revenues overall, a very small decrease in terms of overall expenses, but that has a big impact on the bottom line, particularly when you're at that point where Wells Fargo is. So I thought Wells Fargo's results looked really good, but they're sort of cost-cutting themselves into leaner and meaner shape. That's really good. But I think the big disappointment was, of course, Citibank, and we saw them basically rack up enormous amounts of losses there. And the CEO, Jane Fraser, has now had to come back and say, okay, we're going to cut even more. She basically sort of implemented a big restructuring program back in October, and the markets really responded very, very well to that. So Jane Fraser has done a fantastic job of talking up her stock price by promising enormous restructuring and enormous headcount cuts. So far, the results are basically too soon to basically see those, but she really has her work cut out for her in the coming half year to really demonstrate that she can deliver that.
Well, let's just pit you against Mike Mayo. Of course, we do this over the past 5 days. He says the stock can double. There's going to be a metamorphosis at Citi. You say it's jawboning by Fraser rather than actual ability to deliver. Do you doubt the scope of Citi to deliver?
No, listen, I think Jane Fraser is a very, very competent, capable CEO. It's a very difficult organization to manage. I mean, Citibank is unusually global in scope, has many, many different layers of management that she's trying to break out, basically. Now, she started this program after the stock price had come down quite severely under her watch, and so she was under tremendous pressure to deliver something and show something. Now, is it just jawboning? I wouldn't say that. That would be unkind to say, but so far we haven't seen the results. Okay. But we're only a few months in, so I don't think you'd expect to see that.
Octavio, so as we said, we get Goldman today. They were ranked one of the top M&A advisors for the end of 2023. Octavio, is M&A back, or are we at least getting signs that it's on its way back in 24?
Listen, there's some uptick in activities there. That looks good. The other side of investment banking, IPOs, does not look good on the equity side. Debt underwriting is surprisingly resilient despite the increase in interest rates. So the people are issuing more debt again. I guess they're being forced basically to go back to the markets and raise more debt. So debt issuance done reasonably well. Equities issuance kind of badly. And M&A activity is looking encouraging. So I think we're going to see an upside there in 2024 on that front.
Yeah, when you can't get a cup of coffee with your friends that do debt underwriting, you know they're just building up Q1 bonus pot. They'll be in Gestad before me. Octavio, let's talk about Goldman Sachs. The stock's up 30% in the back quarter. We have had a really, really nice run. What went through my mind is there's a worse past for Solomon, bounce in the stock. You're going to get a net revenue growth after 7 quarters of declines. Is the worst past for Solomon?
Listen, the consensus seems to be that it's going to see a bit of decline this quarter. I don't agree with that. I think looking at the results we've seen come in from the other banks gives a very, very clear picture. So once you see what JP Morgan has done and Bank of America and Wells Fargo and some of the others, you can really sort of see very, very clearly what's going to happen with fixed income trading and equities trading, investment banking, Goldman Sachs. And I'm quite encouraged with that. I think we'll see sort of single-digit growth in terms of the revenues. What they've really done with their expenses, I'm not entirely sure. But I think at least their net income will be flat, and I expect it to actually go up a bit. So I'm thinking Goldman Sachs is going to have a very good quarter overall, or they're going to beat expectations that are quite low, actually.
Manis, I wonder if this means that they'll let Solomon DJ again, if finally there's some improvement.
You know, at some stage we've all got to mentally let that image go, don't we? You know, I think every time they see that image, they just cry. So I think we just need to park that now. I mean, he's desperately trying to. Let it go.
So true. I mean, Octavio, the other thing that Goldman's trying to unwind, besides the image of Solomon at the DJ stand, is their commercial lending. How important is it going to be to get an update and a timeline for when they exit the Apple deal?
Well, listen, first of all, DJing, I think Solomon has the right to have his hobbies on the weekend, I think. I don't know why he has to give up everything and sacrifice everything for that.
Exactly.
So I think the basic, I mean, it was basically PR and marketing more than anything else. He was sort of positioning and honing his own brand there and saying, okay, I'm absolutely serious and dedicated to this, and which I think he was the whole time. So I don't think that really was a big distraction. In terms of the retail lending business, of course, that's been a really big disappointment for Goldman Sachs, and they've gradually been unwinding that and getting rid of that. I think that's going to take some time to do. I mean, Goldman Sachs was very keen on having and diversifying its sources of funding, basically, and so we'd like to have a strong retail base of depositors that we can draw on then in our activities, and basically that's a source of funding that is much more stable and safer, and that was basically the lesson up to 2008. But they've basically made a mess of it, and it hasn't worked out for them.
To the point, Octavio Morenzi. Well, that's what happens when you make a little bit of a mess. You just clean it up and you move on. Spilt milk, don't cry over it. Octavio Morenzi of Immerse with his calls on the market. Danny, what have we got still ahead? We're going to talk politics in Des Moines. We're live for reports as the former President Donald Trump wins the Republican caucuses in Iowa, right here on Bloomberg.
Studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action at a new time, 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
This is Bloomberg Brief. I'm Manus Cranny in New York, alongside Danny Berger in London. Now, the IMF's managing director says artificial intelligence risks higher inequality and can harm financial stability. She spoke with Lisa Abramovich at Bloomberg House in Davos a little bit earlier today.
60% of jobs in advanced economies over a foreseeable future are going to be impacted by artificial intelligence. And they would be impacted in one of 2 ways. If you're lucky, artificial intelligence will enhance your productivity, make your job more enjoyable, and very likely better paid. If you are unlucky, your job is gone.
The United States is putting a lot of money into this. China's putting a lot of money into this. They might not have all of those prerequisites, but they do have a lot of money that they're funneling into the development of this. Does that make your job harder? Because there's almost a new arms race between the most powerful nations that are all member states of the IMF.
What is making our job harder are two risks that come with artificial intelligence. One, increase of inequality. The world is already so unequal that it impacts the fabric of societies, and it spills over in protests on the streets, in lack of trust in governments. And artificial intelligence, unless this is attended, is going to deepen inequality. Those workers that would see their jobs enhanced, they'll make more money. But those that see their jobs gone, if there is no social safety net for them, they're going to be in deep trouble. And then across countries, inequality would grow. The second big risk we see from our perspective is on financial stability. Why we are concerned about that? Because artificial intelligence can lead to manipulation of data, of perspectives for companies and countries in a way that we have not seen so far. So what does it mean? Well, it means that governments have to wake up and take this very seriously. At the moment, I don't think they do. I don't think that they're looking at their level of preparedness seriously and then doing what is necessary to step up. But especially to figure out, what do you do? How do you regulate something that changes so rapidly? And how do you regulate it to bring the risks of misinformation, disinformation down, but grab the productivity benefit?
Kristalina Georgieva, the IMF Managing Director, speaking with Lisa Abramovich at the Bloomberg House in Davos earlier today. Stay with us throughout the week. We have plenty more interviews live from the World Economic Forum in Davos. But first, coming up here on Bloomberg Brief, we're live in Des Moines as Iowa voters deliver former President Donald Trump a victory on a very cold night, moving him one step closer to a White House return. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It is Bloomberg Brief. I'm Manus Cranney in New York. Danny Berger alongside me at London HQ. Let's focus in on U.S. politics now. The presidential race is officially underway. The voters made their voices heard in the Iowa caucuses.
Most importantly, we want to thank the great people of Iowa. Thank you. We love you all. What a turnout, what a crowd. It was a very special night. And this is the first, because the big night is going to be in November when we take back our country.
They threw everything but the kitchen sink at us. They spent almost $50 million attacking us. No one's faced that much all the way just through Iowa. You helped us get a ticket punched out of the Hawkeye State. We have a lot of work to do.
Our campaign is the last best hope of stopping the Trump-Biden nightmare. Thank you, Iowa. We're going to continue on. We're going to make you proud, and we're off to New Hampshire. Thank you very much.
Well, joining us now with more details on the result is Bloomberg's Gregory Corti, who was on the ground, I should say, in Iowa. Good to see you. Thanks for doing the long and extra hours. I mean, when you look at this result, it's almost like there's nothing can stop Trump. 51% voted for him, double the widest margin in the caucus's history. What's your takeaway?
Yeah, the only real surprise last night wasn't who came in first. We all knew that. We were all kind of waiting to see who would come in second. But the biggest surprise was just how little time it took for the TV networks and the Associated Press, who we rely on at Bloomberg, to call the race for President Trump. It took 31 minutes after the caucuses started, which means that most people were still in Iowa, were still caucusing. They were still meeting with their neighbors in this unusual process that they have in Iowa to talk about the candidates and to cast their votes. And it barely started before we knew Trump was going to be the winner. And then later on, we learned that it was going to be Ron DeSantis in second place and Nikki Haley in third place. And as you just heard Ron DeSantis saying he got his ticket punched in New Hampshire. That's the way Iowa tends to work, is that we say that there's 3 tickets out of Iowa, and now we have 3 tickets, 3 candidates going to New Hampshire on the 23rd for the first in the nation New Hampshire primary. But one of these two, Ron DeSantis or Nikki Haley, has got to step up and prove that they can get the support to take on Donald Trump, or else this is going to be a very quick nomination fight.
Well, Gregory, I have good news for you. If you're heading to New Hampshire, instead of -8 degrees, it will be a wonderful 23 degrees. What a joy you have on that campaign trail. Exactly. How does this set up for New Hampshire? I mean, is there any reason to expect, besides the slight change in weather, that there would be a change in outcome?
Well, you know, we're getting to the phase of the calendar where usually things start to get really dynamic, where candidates can really take off and shoot up in the polls, or campaigns can completely collapse in the span of a week or even a few days. But this is a very unusual primary season in that the front runner in former President Trump is so well known to Republican caucus goers and primary voters in New Hampshire. And so there's little reason to believe that the fundamental dynamics will change, except that Nikki Haley has been shooting up in the polls in New Hampshire. So certainly she has the momentum there, and she will be closely watching New Hampshire to see if she can make it close enough to Trump before then the next month the race moves down to South Carolina. Now, that's Nikki Haley's home state, and if she can hold her own there, then maybe going to Super Tuesday in early March, then maybe we have a race. But that's still a big uphill climb for Haley or for DeSantis.
Yeah, they've both got a lot of work to do there. We're hearing from President Biden. It looks like Trump just won Iowa. I mean, that's stating the fact. This election's always going to be you and me versus extreme MAGA. So, of course, the odds, we're now going to have to work out these odds of a Trump-Biden rematch, aren't we?
Well, they're looking increasingly likely that it's going to be these two. And this is kind of what President Biden has been waiting for. He has been lagging Trump in the polls. But if you talk to the Biden campaign, their theory is that what's going on is people it hasn't really set in that we're doing this again, right? And that this is not just a referendum on the last 4 years of President Biden, but it's going to have to be a choice between, do you want the president you had 4 years before that, or the last 4 years that you've had? And that's the choice that Biden is going to have to put before voters.
Gregory, thank you so much for that. Bloomberg's Gregory Corti. Please stay warm. Don't go outside anymore. Just stay bundled up. All right, that is it for Bloomberg Brief. Surveillance is up ahead from a very warm London studio to a warm studio in New York.
Venture capital, it's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Great World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The big risk, I think, for markets is that inflation effectively gets stuck.
We are getting inflation prints that are a bit hot.
We know the consumer at some point is going to get squeezed a little bit, so that risk-off component is in there.
You run the fine line of potentially
keeping inflation underpinned at a trajectory that's uncomfortable if policy, if psychology doesn't moderate a bit.
This notion that immaculate disinflation is going to continue is something that I find very hard to reconcile with actual data.
This is Bloomberg Surveillance, live from the World Economic Forum in Davos.
So, Bramo, I've got one question. Is it good morning or good afternoon? This matters.
It's good afternoon, I'm sorry to say.
Live from Davos, Switzerland, for our audience worldwide. Good afternoon. Good afternoon. This is Bloomberg Surveillance alongside Lisa Abramowitz. I'm Jonathan Ferro, together through the week with Anne-Marie Hordern. In Davos, Switzerland, right now, the eyes of Davos. Bramo on Iowa.
Everyone's just focusing on Donald Trump. Everyone is talking about it behind the scenes. No one really wants to talk about it when you get them alone, when you are in front of a group. But here's the question.
I sense that too.
Yes, 100%. I mean, this is the awkward elephant in the room when you talk in front of a panel. But it's definitely everything that everyone is analyzing and, frankly, unprepared for as they really discuss in private.
AMH, in many ways, Davos started last week on Friday with those comments from the ECB President Christine Lagarde to French TV. That set the tone for the conversations through the whole of this week.
Absolutely. And Trump is not just dominating in Iowa in the polls, and then he's going to go on potentially into New Hampshire. He's dominating the conversations here because Europe, even though they've had 4 years to prepare for potentially another Trump 2.0 administration, they're running around almost panicked, is what it feels like at this time.
Well, let's build on that. So President Lagarde of the ECB, let's park the fact we're talking about a central banker commenting on politics. Let's talk about the substance. President Lagarde, Bramo, is essentially saying that the former president, if he becomes the next president, he's going to be a threat to European goals, climate, NATO, etc., etc. I think we have to reframe that as well. What has Europe done from America recently? What has Europe done for the United States and the White House? And I'm thinking of several key areas. We can talk about China. We can talk about NATO. What happened to military spend across Europe for the last 10 years? Have they delivered, stepped up to the plate? And to your point, they've had 4 years to meet that task.
So it feels like you aren't buying into the message of rebuilding trust, which is the theme of this year's Davos.
There isn't
meeting.
any.
Well, but this is the issue, right? Are we seeing a splintering in that order that's really highlighting some of the tensions that are underpinning this particular meeting? That, I think, is what's coming to the fore with some of the anxiety around Trump.
When it comes to NATO, that is going to be top of the conversations because President Zelensky is here and he's making his pitch to business leaders, to world leaders, that they need more support. But if you look at the Warsaw Security Forum that happened a few months ago, a member of the UK Defense said, you're not hitting your 2% target. This is something Trump complained about and lambasted Germany and the others for. And this defense minister said, if we're not hitting our 2% target now, when there is a war in Europe, what else do you need to wake up to these risks?
This is going to be a massive, massive focal point through the week in Davos, Switzerland. Let's start with the price action and go straight to the equity market on the S&P 500. Just a little bit softer to start the week, just a touch negative on the S&P. We're down by about 0.6%. Yield shifting higher. Let's call it 4%, Bramo, on a 10-year.
Yeah, but everyone's trying to push back, and we're hearing from everyone, gosh, stop getting so ahead of your skis. Every single person seems to be saying the same thing. We have an incredible lineup today. First, we're going to start off with Ken Rogoff, who's sitting alongside us, Harvard professor, former IMF chief economist. We're going to be speaking with the head of Moderna, Stefan Bancel, BNY Mellon's Robin Vince, and South African Reserve Bank Governor Lesetja Kganyago. That's all coming up in the next 90 minutes or so, John, as we are here in the beautiful Swiss Alps with bells chiming in the background.
Let's be very clear. We get lucky. I've always felt this way. When you are a European-based anchor working for Bloomberg TV, you have to do this in the freezing cold. The US hours, about midday Swiss time, sun starts to come out. It's actually pretty comfortable, isn't it?
It is right now. Check back with me in an hour and a half, and we can consider that.
Let's kick off the conversation this morning with Ken Rogoff, the Harvard professor and former IMF chief economist. Good morning, Professor.
Hey, good morning.
Or good afternoon.
Good afternoon.
Thank you.
Let's go with good afternoon, and let's talk about what's happening in the global economy. You wrote a fantastic piece in The Guardian just before Christmas. You followed up with a piece in Project Syndicate about the global economy not being out of the woods. Can you just tease some of that out for us, just to begin?
Well, there seems to be this consensus here in Davos, but I'd also say more broadly in the States that, it's not going to be as good as 2023, which was surprisingly good, but it's not going to be bad. Inflation's going to come down, soft landing, and there seems to be very little understanding that there's a lot of volatility around that. And if you look at the geopolitical situation, forget about Trump, which we were talking about, but the geopolitical situation's like nothing I've seen in my professional lifetime. I mean, we've gone exactly where we are in Cold War II, but we're in Cold War II, could get to be a hotter Cold War II than it was. And that's very destabilizing. I mean, think what the 70s were like. I mean, part of that, of course, was the breakup of Bretton Woods, but it was also, Iran, geopolitical instability. And so that, I think there's a lot of volatility. It's not all bad. I mean, we could have a good year, but that's really hanging over our head.
As a market participant, what do you do with, you don't know what you don't know? You don't know about the volatility. What do you do with, hey, a President Trump coming in 2.0?
Okay, well, they're two separate questions. One's a lot of volatility, and others extreme volatility. So I don't know what to say. But no, I mean, I think volatility probably is not good for risky assets in general. That's what we teach in economics anyway. If there's a chance that the Red Sea gets closed down for 6 months and it adds to inflation and the prices of everything, even if you believe at the other side it might be smooth, AI kicks in early and growth is good, our models say the prices should be lower in that case than that. But I mean, I have no idea how to interpret the market. It seems very sanguine. Even when I look at things like oil prices, I don't get it. I mean, why isn't there more of a premium built in? They, just think this is going to be over in a week? Because at least the political scientists I talk to, say if you look at Ukraine, if you look at what's going on in the Middle East, if it's the same next year, that's like the good outcome, that it's very risky.
Well, so far, oil vessels have been able to get through the Red Sea. A lot of it has been consumer goods, those vessels. Is it hitting someone's bottom line at this point, and that can increase inflation?
Well, I mean, the question's what's next? If it picks up, where is it going? There's certainly, I think, shipping rates have gone way up, right? I mean, that eventually hits something that's, only a component of what you pay, but we're sort of in a volatile stage. It's not that what's happening is going to make inflation blow through the roof. It's sort of what happens next. You can say the same thing about Russia and Ukraine. I mean, I support Ukraine. I've worked with the Ukrainians, but it's not been a good year. I don't know what else to say about it. Well, and, there are risks of something getting worse and how that feeds into markets and how that feeds into prices and everything.
So you don't buy that the sort of lull of 13 million plus barrels of oil per day in the U.S. that are being pumped can really offset all of that geopolitical risk?
Well, it has. I mean, it's been a factor, but up to a point, right? I mean, it depends on, it doesn't offset all the geopolitical risk because it's not just about oil prices. It's about other commodities. It's about investment. It's about many, many global supply chains, many, many things.
We started the program this afternoon, by talking about what was about to happen in the United States and how Europe as a continent would respond to it. What strikes me early on at the World Economic Forum is the absence of a conversation about what on earth Europe is doing for itself, how broken the German growth model is, how it's been totally exposed over the last, let's say, 2 years, energy with Russia, the fractures with China and where the United States stands on that, and maybe the ability or willingness of the United States to provide defense support if we do get the former president back in the White House. What is the European growth model going to be, and what does that discussion sound like to you?
So, I mean, that's a really good question. So, a conversation I've had with many Europeans here is, are you planning to do anything for your own defense? Do you realize that even if Biden wins, it's not clear we're going to be able to project defense spending at the same level if there's 2 theaters, much less 3 theaters? You aren't. As far as I understand it, Europe has depleted its stocks of munitions. Russia has built up its war machine. Europe, not really. And that's just one example. And I think you're asking about the European growth model, and especially Germany. And, maybe my perception of watching this for a long time is that Germany was the sick man of Europe. When I was at the IMF, that was the line. That was the headline of The Economist.
That was the 90s.
That was the 2000s, the early 2000s. And then they reinvented themselves with the reforms that they did that were made it a little bit more easier to fire workers and things like that. And then they've undone everything with pensions and everything. I mean, they've gone to a much more French-style model, and they're getting French-style, growth rates. And at the same time, China may not be the export destination that it was. The electric vehicles are coming from China instead of the other ways around. So I mean, I'm a believer in Germany that the East Germany was successful under the Russians. They were the most successful of the Soviet bloc. They will reinvent themselves, but it's not happening in the current administration. And so more broadly in Europe, you know, there's definitely a question of what their growth model is, and a little bit like a deer caught in the headlights here of the Russia on one side, the U.S. probably in retreat from Europe. If it's Trump because he's retreating from everything, if it's Biden because he's trying to spread himself too thin, one way or the other, you know, less in Europe. What are you doing about it? And I just get blank stares.
So they don't have an answer yet. What about the U.S. growth model and the deficit in the United States that they're running? In the next 10 years or so, we'll be paying more on interest payments than our defense bills.
So I believe, and I said this last year when I visited you, that the era where interest rates are zero and everything's free is over. We never should have thought everything was free. Interest rates fell off a cliff after the financial crisis. If you look at the long history of interest rates and real interest rates, as I have, we've had periods where it's been low before, but they end. We've had periods where it's high before, but they end. And I think we're much more on trend now in where interest rates are. If that's the case, then there's a lot more adjusting to do. And there seems to be zero political appetite in Washington. The only time they can kind of get things under control is when there's a divided government and they can't agree on anything, and they can't. But I mean, certainly if you get the Democrats sweeping into office in a bigger way than last time, you know what's going to happen. And Trump will run deficits too. I mean, I hate to predict anything he's going to do because the whole problem is he's completely unpredictable. But, you know, there's no appetite for that. And I think, what is the end game to that? The end game is we're going to get these bouts of inflation like we had. And that's not an end in itself, because then the bouts of inflation eventually feed into interest rates. And we don't believe that inflation's going back to 2%, and it's a bad cycle. We've seen this movie before.
Based on that, given the fact that everyone's expecting the Fed to cut rates, possibly, if you believe the market, 6 times this year, what do you think is sort of the end place for this rate cutting cycle?
I mean, I think we end up at 3.5% at the very end of this rate cutting cycle, something like that. You know, long-term rates at 4 to 4 or 5, you know, something like that in the very long run. You know, I think what happens in the next year, the 6 rate cuts, that's a pipe dream if we have a soft landing. That's not happening. We'll get 2 or 3. But there is a chance. I've said the one thing we can probably be sure of is that whatever the consensus is here, and not just here, it's going to be wrong. And if we get a deep recession, and definitely it could happen. How's it going to happen? I don't know, but 25% chance it happens. Well, they will cut rates a lot, not 6 times. They could cut rates, you know, 15 times. I don't know if I'm doing the math right, but a lot of times, you know, if that happens, they're going to drive interest rates to 1%. So that could be built into that 6 rate cuts, possibly.
Ken, this was great. Fantastic to start the week with you, as
Thank
always.
you.
Professor Ken Rogoff of Harvard. I think we can all agree that this forum often turns out to be a highlight reel of bad forecasts. Isn't that what often happens, Lisa?
It often is when everyone comes in and says that it's going to be an amazing year, and then you get a pandemic, or everything's going to be terrible, and you get a boom year.
The comments on Europe, I think, are absolutely critical for the conversations throughout this week. When the Europeans start to become fearful about the future of US policy, I think the Europeans need to focus on themselves a little bit more about what they're going to be doing next. Up next on this program, Libby Cantrell of PIMCO is coming up in the next hour to break down the politics. The front runner in the Republican Party is about to run away with it all.
talk about organic development, which of course is the core. People talk about M&A, but sort of not as much is talked about how much enterprise value gets created by partnering effectively. So that's the spirit with which I think about OpenAI. We just want to have a good commercial partnership, and we want to be investors in the entity, in even the way they're structured. So what I would like is good governance and real stability.
That was Microsoft Chairman and CEO Satya Nadella discussing their latest investment and partnership with OpenAI, the topic of artificial intelligence dominating discussions here at the World Economic Forum. Here in Davos, Switzerland, let's get you a flavour of the price action going into the market open a little bit later on this morning. Equity futures on the S&P 500 pulling back just a touch. We're negative here by 0.5%. Lisa, busy week again, really, for earnings. We hear from Goldman and Morgan Stanley a little bit later.
I love that we're not even mentioning it, even though that really should be front and center, considering that we did get sort of a bleak outlook going forward from some of the other banks. We get something similar from the Morgan Stanley, Goldman Sachs competition.
We'll hear from Shonali Basak a little bit later on this morning. She's going to break things down in front of the Bloomberg terminal over in New York City. A range of events happening on the sidelines of the summit. Always the sidelines,
always.
Right? Never like in the summit, but always the sidelines. A range of events happening on the sidelines of this summit, including this one. Bill Gates, the co-chairman of the Bill and Melinda Gates Foundation, speaking to Francine Lacqua at Bloomberg House in Davos. Let's take a listen.
Which is very high impact, to make sure that that's well spent and that the voters who get behind that feel good about, okay, you're responsible for this result with only, a tiny portion of your budget. And there are not only humanitarian benefits, stability, economy, environment, huge benefits, because as we make the world healthy, that's where you get the population growth actually gets to a steady state.
So what do you want to focus on in health? And we have some actually pretty incredible gadgets that use also AI to scan, for example, when females are pregnant, whether the baby is okay. But in the next 2 to 3 years, like, what would your priorities be?
Well, I've been amazed at the speed of innovation, and that's even before now we'll use AI tools to design new vaccines and get at the very toughest problems, like getting a great HIV vaccine. This is a device that'll cost $1,000 or less, and we connect it to AI software, and so the cost per delivery is less than $1, where you scan and you see, is there anything about the cord or the amniotic sac that woman is likely going to need a C-section. And so we funded looking at tens of thousands of pregnancies and showed the AI here, this one came out normal, this one came out abnormal. And so it's even better than the best human at doing that prediction. And so, even in rural Africa, you connect this to a cell phone, you do the scan, tells you what you need to know, and that would cut maternal deaths in half if we made it broadly available.
And so what's the challenge in making, and I've seen pictures, I mean, it's incredible. You can really hook it up to an iPad, and you can kind of see, even when there's like, a nurse in a village of like 10 females, what's the challenge in getting that to the right place at scale?
Well, we had to spend hundreds of millions of dollars to invent this, and now it's going through the regulatory process, and that's also very expensive. Sadly, there's no natural market for this. The people who benefit from it have very little money, so the normal market mechanism of, is this a priority for the innovation agenda? Without governments being generous in philanthropy, it just never happens. But it's coming together. I was in Kenya seeing the work, and we'll get it out there. We have partnerships with lots of the ultrasound companies, including Philips, who, if we fund it, they work with us very well.
And this is an HPV single dose. So you basically have a
That was Bloomberg's Francine Lacqua sitting down with Bill Gates. You can watch more of that interview when it's uploaded to Bloomberg.com. Got to be across a range of issues throughout this morning and throughout today, but without doubt, top of the agenda for us, I think, today is what happened overnight in Iowa. Anne-Marie, just another stunning victory, but widely predicted for the former president.
Widely predicted, Donald Trump coming in #1. What was less predicted was potentially who was going to come in #2. But DeSantis was able to pull it out. He spent so much capital and time there. He did the full Chuck Grassley, 99 counties. Nikki Haley, though, coming in 3rd. What was so interesting, though, and probably very demoralizing for the DeSantis campaign and even the Haley campaign, within 30 minutes, AP, CNN, CBS, all were all ready to call it for the former president.
Let's get some reaction. We can do that with Terry Haynes, the founder of Pangea Policy. Terry, wonderful to catch up with you, sir. Let's just get your reaction, your first thoughts following what happened overnight.
Hello, everybody, and good morning. Three thoughts, really, four, let me say. Firstly, the Iowa turnout was very, very much down, and that shouldn't really surprise anybody given the weather, but it was barely half of what the 2016 turnout was. So what's going to happen is these results are going to get sliced and diced, but I think a little bit denigrated, frankly, by the fact that there were so few caucus goers out there, comparatively speaking. Now, with that, how I tend to look at it is Trump versus not Trump, because that's what the street wants to know. And what we come away with, I think, are three things. Half of early primary voters don't want Trump to be the nominee. Secondly, there is a not Trump Republican nomination path that remains viable and probably gets pumped up from New Hampshire a little bit, and then nothing happens for a month. So this race will be very much at loose ends, which is good for challengers. And thirdly, buried in the Des Moines Register polls, the worst news for Trump is that nearly 30% of likely Iowa Republican caucus voters wouldn't vote for him in the general election. So what you're seeing is a looming Republican Party split should Trump become the nominee.
It didn't seem like this was a split, Terry. As you know, we were just talking about how quickly all of the networks called this for Trump. Who's going to be number two? Did we learn that at least? If you do think that this is going to be a split race?
No, well, firstly, I mean, it's a split because you've got 51% of Iowans voting for Trump. So my view is roughly 50% weren't for. Secondly, no, I don't think we did, because what you got is a situation going into New Hampshire where Haley is strong, and then there's going to be a month where there won't be any votes, and not until I think it's the 24th of February in South Carolina does voting resume. DeSantis is already on his way there, so I think it's anybody's game for the opposition at this point. But I do think you're seeing Trump's ceiling here.
Well, when you look at New Hampshire, all the ads Trump is putting out is attacking Nikki Haley because he views her as the most permissive challenger right now, the hardest for him to beat. But with DeSantis coming in second in Iowa, it looks like he's going to stick around now. How difficult is this going to be for the Haley campaign?
Oh, I think it's very difficult for them, and I doubt they're surprised by that. I mean, I doubt they thought they were going to get a clear path regardless. I think the media was burying DeSantis in Iowa, frankly, a lot more than the votes were going to come out. And, but he, net, he got about 2,500 more votes than Haley did in Iowa. So both of those are going to look like viable candidates, and continue to run, frankly. And, I think you'll all see them up in Midtown Manhattan very soon, because there's going to be a lot of fundraising that's going to take place over the next couple of weeks.
Terry, let's finish here. Can anything stop the former president?
Can you what, John? I'm sorry?
Can anything stop the former president from running away with this?
Oh, I think so, yeah. If you get a situation where, one of these two candidates, either DeSantis or Haley, kind of continues to consolidate votes, this is a very different situation from 2016 when you had 10 not Trump candidates in Iowa as opposed to, effectively 2. If they consolidate around one of those candidates, frankly, and Trump's margins don't get any bigger, you're going to have a protracted fight here. So, this is not over for Trump by any means.
Hey, Terry, thanks for jumping on the phone. Terry Haynes there of Pangea Policy, as the Republican primaries are well and truly underway. Lisa, I know what gets you frustrated. You want to talk about policy, and we're just not talking about policy at all, are we?
I mean, we just heard that from Ken Rogoff. The biggest question about Trump is that nobody knows what he's going to do. He hasn't clarified anything. We've had no debates. We've had no policy prescription. It's all been invective and basically saying, look, they stole the election, so here we are going to have a situation where we have to perhaps reset it.
Well, when you're in Europe and Davos, what they're so nervous about is that 10% Trump tariff wall he wants to build. If they thought the tariffs were bad last round, it's going to get a lot worse. More
coverage of U.S. politics throughout this morning. Up next on the program, Lisa has questions. Everyone's sick. Stefan Bancel, the Moderna CEO, up next.
much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is Deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We're live from Davos, Switzerland at the World Economic Forum. Your price action this afternoon, this morning, depending on which part of the world you're in right now, looks like this. In the equity market on the S&P 500, equity futures shaping up as follows. Negative by 0.5%. On the NASDAQ, we're down by about 0.6. Earnings season well underway. You'll hear from Goldman Sachs and Morgan Stanley in the next 24 hours. And then early February, in fact, at the end of this month, Lisa, we start to talk about tech as well.
Which is really the main theme here, I would say, in Davos, artificial intelligence, which everyone basically says, we don't know what's going to happen, but let's all talk about it and angst about it, because that seems to be the theme right now.
Another theme is U.S. debt. Budget deficits in America, trying to confront them. Is anyone going to confront them? Let's check out the bond market. 2-year, 10-year, 30-year. Treasuries look a little something like this. On a 10-year, yields are higher by, let's call it 6 or 7 basis points here, Lisa, just north of 4%. What's unusual is that we have got a consensus, surprise, surprise, shock, in Davos, Switzerland, but it's on Federal Reserve interest rates. The pipe dream of a soft landing and 6 rate cuts this year, the words of Ken Rogoff, Harvard professor, in the last 30 minutes.
Basically saying there is no way they're going to get more than 2 rate cuts if we do get a soft landing. And we've heard pushback after pushback by Fed official. IMF chief economist came out earlier today. The market's not buying it.
You do wonder where that leaves the President of the United States.
They're banking on a soft landing.
Big sign.
They've all said it. Treasury Secretary Yellen, Joe Biden, and the economy is the #1 issue, John, when it comes to American voters.
Let's turn to foreign exchange just briefly and have a quick look at the euro. Lisa can guess where this is. The euro against the dollar, typically around 109.50 and not a million miles away this morning, Bramo.
That's basically where we're at right now. A real question, you mentioned Europe and what their growth is going to be.
Huge.
And I don't see that being priced into the euro. Kit Juice was talking about that this morning in a note.
The data comes out of Europe, data's bad. Where does that leave the ECB? Never mind having a single mandate to focus on inflation. The growth model in Europe is broken. It's shocking to me that every time we sit here in Europe, there isn't a bigger conversation about what the growth model is going to look like. Let's think about every single issue we talk about at the moment. EVs. Yeah. Where's Europe on EVs? AI. Where's Europe on AI? They want to regulate it, sure. We all understand that. But who's driving it?
Which is the reason why a lot of people are just shrugging when you've got ECB officials who've come out one after another saying, we're not even going to cut rates this year, and the market's basically laughing at them, because what is the growth prospect to really get them out of the situation?
John, what you have said about Europe is right. They've outsourced energy to Russia. That blew up in their faces. They outsourced their economy to China, and they're still trying to do almost different plans, depending on who you talk to, whether it's Macron or Schultz, and they've outsourced their defense to the United States of America.
With the President of the United States seemingly leaning into this sort of multilateral approach, the next president might not be leaning in the same direction. Under surveillance this morning, Donald Trump moving a step closer to a rematch with Joe Biden. Trump winning 51% of the vote in the Iowa caucus, with Ron DeSantis a distant second and Nikki Haley third. The former president has another chance to tighten his grip on the Republican nomination at the New Hampshire primary next week. Anne-Marie, is the result, the outcome, going to be any different?
Well, potentially it could be, only because New Hampshire, you do have Nikki Haley really trailing Trump's tail there. And you can see all his ad spending is against Haley. But poll after poll continues to show Trump just is dominating the Republican Party. He's almost an incumbent within this primary race of Republicans.
Which is the reason why it's shocking that people are as shocked as they are to see it kind of facing in their, to be in their face. And to me, what's funny is that no one really wanted to think about it, so they didn't think about it. And then all of a sudden, this is sort of the first reality shock, and that even if it's no surprise, everybody knew this was going to be the outcome, it still is sort of igniting a conversation that everyone had been loath to have for so long.
We talked about how annoyed you might be about the fact that we're not really discussing policy. We need to talk about bank policy and regulation. You could see a real shift in approach if we get a change in administration. A little bit later this morning, big bank earnings continue, with Morgan Stanley and Goldman expected in around about an hour. Bloomberg Intelligence expecting Goldman's net revenue to return to growth after 7 straight quarters of declines. For Morgan Stanley, it will be the first earnings call for new CEO Ted Pick. And Lisa, you'll be leading that conversation a little bit later this week.
This is the key question for someone coming into the helm after a storied career of James Gorman. How do you then shape a narrative where Morgan Stanley essentially won against Goldman Sachs? Now he has it to lose, right? There's this question of, okay, well, then how does he sort of follow on at a time where a lot of people are warning of sort of a slow grind in the economy and for banks this year?
So perhaps unfairly, but accurately, I described Davos as a highlight reel of bad forecasts. So last year, the forecast was US economic growth, we could dip into recession, China's going to reopen, it's going to be fantastic. Flip it on its head. Here we are 12 months later, we're talking about this. More stimulus on the way for China's economy. Senior policymakers considering $139 billion of new debt issuance under a so-called special sovereign bond plan. That's according to Bloomberg reporting. The sale would be the 4th in the past 26 years and would fund projects related to food, energy, supply chains, and Lisa, urbanization.
This comes as China sends the largest delegation to Davos since 2017. There is a real feeling that the concern about slow growth in China is superseding a lot of the ideological rhetoric that we've heard from Xi Jinping. Whether they follow through on that remains to be seen. People don't know. What would it take for companies, international companies, to get confidence to go back into China right now?
Well, I think it would take what's going on geopolitically for international companies to want to go on. And also, depending on who the next president is, Joe Biden didn't pivot away from what the former president did when it came to tariffs, and even doubled down. More export controls when it comes to China.
Let's get to the next conversation with Stefan Bancel, the CEO of Moderna, alongside us on Bloomberg Surveillance. Good afternoon to you, Stefan.
Good afternoon.
Rebuilding trust is the title of this forum. We know for your industry, we need to rebuild some trust with the vaccine industry. How do we go about doing that?
I think we go using the data and the facts and trying to work with people who need it most. If you think about it, what makes me really sad in those days is you have a lot of people getting a flu shot to be protected, especially the elderly, which is great. And then some of them refuse to take a COVID shot. When you look at the data this season, you have 5 to 7 times more people being hospitalized of COVID in a senior group than flu. So we have a lot of work to do across the government, industry, to go back to the fact that science is science. And if you look at our lives today, I mean, you guys talked about AI, the airplanes. I mean, all our lives is based on science. And I think we just need to work together to make sure that people have access to the data and the facts, because there's been so much misinformation, and we need to get back to...
Stefan, can I jump in?
Sure.
Science, as you know, as a scientist, is a process of discovery. I think often we talk about it as if it's definitive, that we found something out and that's the rule now. And I think for the general public, listening to the scientists over the last 3 years, I think what they've heard is this is the science, and then the follow-up 6 months later is we got it wrong, we learned something new. How do we change that?
I think that was one of the challenges in some countries where people were a bit too dogmatic, trying to communicate in very simple terms to the public, because you had to communicate very complex science to the public, and sometimes we're a bit too in the absolute, whereas we were learning in real time about this virus. Nobody has seen this virus before. The pace at which, for example, it mutated surprised everybody. I remember when it started, Omicron started to emerge in November 2 years ago, being shocked with my team looking at the sequence and saying, it changed so much, and turning to my top scientists and saying, when did you expect this would happen? They're like, maybe a year or two from now. So a lot of humility in terms of the science and about also communicating. I remember early in the pandemic, hearing public health officials saying, you don't need to wear a mask. And watching this on TV and saying, how can you say that? Because it's a respiratory virus. Of course you need to wear a mask. I understand what they were trying to do, which is to protect the supply for people working in hospitals.
Right.
But by making such a blank statement, you lose credibility.
To that point, a lot of people here are sick. A lot of people have canceled. Are you wearing a mask?
No.
Okay, so
because I'm vaccinated.
Okay, but a lot of people are frustrated that when you get vaccinated, you still get sick, just less sick. Are we getting closer to getting vaccinated and then not getting the flu, or not getting COVID, or not getting RSV?
So it depends on our immune system is what it is as humans. We cannot change that, or we don't know yet how to change the immune system. And so the question is, when do you get infected versus when you got the vaccine? Which is, if it's many, many more separations, you're going to get protected against long COVID. If you think about it, the piece we should all think about those tools, vaccines, is to protect you against very bad outcome, like insurance, you know? And so for the elderly, you don't want them to get hospitalized. For people our age, is not getting long COVID. I didn't get my COVID shot because I'm scared of being hospitalized. You know, I'm 52, I'm pretty healthy. But what I don't want to have is long COVID. I had coworkers who got long COVID, and it's really, really bad. And those were healthy people in their mid-40s that spent 6 months without being able to be a father or a mother, a coworker. And these are the type of things we need to prevent.
We're trying to move into the post-COVID era. We're trying. I don't know if we have, but we're trying really hard. Yeah. And I'm wondering, from your vantage point, how you get Moderna to be a company other than a vaccine company, which isn't as profitable, isn't as lucrative as other drugs that are reimbursed at higher rates.
So I want to challenge that a little bit. I think innovative vaccine is a very good business. What you don't want to be is in a vaccine where you have 50 Me Too's, and the price, of course, is very, very low. Look at what Merck has done with HPV. It's a $6 billion franchise. They own the franchise around the world, or what GSK has done with Shingrix. And so I think it's highly possible. And if you look at the Moderna pipeline, a lot of innovation coming, including with this year. So we're going to see our second product launch this year. When it happens, will make us really a platform company, because it will be the second product using exactly the same chemistry, the same technology. And then we have products like CMV that we should have a phase 3 this year. CMV is #1 cause of birth defect in the developed world, so in the UK, in the US, in Europe. And there's no thing today. There's no vaccine that exists. Everybody has tried. They all broke their teeth on trying to make a CMV vaccine. And so this, I think, is very lucrative, because those viruses are not going away. So if you think about the discounted cash flows over many, many decades, I mean, those are very interesting businesses. And then if you think about what we're doing in cancer, just before Christmas, we announced 50% reduction of death or recurrence of disease versus the best drug on the market in a clinical study for skin cancer, and we believe this can be extended to lung. There's a phase 3 ongoing, and other cancers. And then genetic disease. This is another area that we've not talked a lot about recently, but we have very profound clinical impact in kids that have basically wrong DNA from mom and dad, to which we provide the instruction through mRNA to give them the protein that we make every day without thinking about it, instead of like giving a liver transplant. So you're not changing a whole organ for one protein missing. And that's what's happening for Moderna. Is you're going to see this year an amazing number of clinical data coming out of new product launches as we move into the post-COVID world.
Let's talk about one launch. You've launched an RSV vaccine.
We're going to launch soon. We've not launched yet.
Okay, in the process of doing so. You will be third to market, I believe. How do you plan to compete?
So a few things. First, we have the best profile. The 2 other vaccines that are on the market are very complicated to prepare. As you know, there's a big shortage of pharmacists and technicians in pharmacy. Even some pharmacies in the US had people on strike. And so our product is very simple. You take it out of the fridge and you inject it. It's in a pre-filled syringe versus the many steps of preparation and potential medical errors in the 2 existing product. Another piece that people have said, they'll say, oh, Moderna, you're a small company. You can't compete with established large players. Look what we did to market share of COVID in the US this fall. We increased our market share tremendously despite having a much smaller team than the other mRNA player, because we use a lot of technology. We also get the facts in front of the medical professional, which is our vaccine, because of its higher dose, has shown time and time again through big studies having less hospitalization than the other mRNA vaccine. And so our science and the ease of use of our product is what's going to drive us to be competitive.
So distribution. Is it going to be at CVS? Will it be carried by places like CVS?
Oh, it's going to be available, of course, in retail pharmacy. One of the things that COVID has done is to accelerate the role of pharmacy in terms of vaccination. Flu, COVID, 70% of COVID season to date has been delivered in pharmacies, which actually take capacity out and provide the doctors to be able to do things that are more specialized in terms of work. So I think it's good for patients.
Stefan, this was great. It's good to catch up. It's good to see you. Stefan Marcel there of Moderna. Elisa, the title of this forum, we'll keep revisiting it. It's Rebuilding Trust. There's an industry that's trying to rebuild trust.
And it goes deep, right? There's sort of this, we were talking about offline, this sort of tribal feel and a very political feel around vaccines, partly because of some of the mandates and the changing understanding of the drug. But, you know, how do you get people to take something if they cannot be hospitalized as a result with science that's evolving in real time?
Well, I think Stefan just convinced us all if we don't want long COVID, we need to get those vaccines. But to the politicalization of this, and to Stefan's point, when you have an official that comes to the podium and says, oh, you don't need to wear masks because they're just trying to hoard them for the medical profession, you just have to be honest with people, or you lose trust and then you lose credibility.
You lose credibility, and I would argue they've lost credibility over the last few years. Do you remember when crypto was like the rebel child of finance, and now it's just kind of like institutional?
It's been institutional at Davos for a while.
I'm not going to say it's boring. I'm just going to say it's institutional. That's coming up next. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but this is, my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and where the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Of the G20 countries have crypto regulation. You see that in Japan, you see that in Singapore, you see that in many countries around the world, big financial centers. And so we're optimistic the U.S. jumps into this and gets this right, but we're definitely seeing a lot of thoughtful regulation in many countries.
That was the Coinbase CFO, Alessia Haas, speaking to Francine Lacqua on the optimism of crypto as Bitcoin gained ETF approval just last week in the United States. Alongside Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance Live from Davos, Switzerland at the World Economic Forum. Just to check in on the price action, it's not just about Davos this week, of course. We need to talk about earnings through this morning from Goldman Sachs and Morgan Stanley. Equities pulling back just a little bit here, Lisa. We're down about 0.5%. I've said it a few times over the last week or so. The highlight of earnings season for me, and I think for many others as well, will be Apple in early February, given the two downgrades we saw in early January following a massive year of gains for that stock.
Well, what is it? 30% of the S&P 500 market cap for these companies? I mean, at a certain point, they are the index. So you can talk about banks as some sort of bellwether for the U.S. economy, but ultimately it resides in this question of whether tech can continue to rescue the U.S. economy from some sort of sluggish growth and just sort of sluggish performance in the rest of the stocks.
You know, I think we talked about a little bit earlier on. We did a series of panels at the World Economic Forum a little bit earlier on this morning about peak private markets. You think about what's changed more recently, just this fear that public markets have been reduced to, say, one region, 7 names. And that ultimately, if you want alpha diversification, you've got to go elsewhere. When we talk to the bankers this week, ask them about regulation and the prospect of higher capital rules, and you're going to see a lot of unhappy faces. You ask the asset managers in private credit, you're going to see a lot of happy faces. Regulation this year is a big deal.
That's been the issue, and frankly, the complaint from a lot of the big banks is that private capital is stealing our lunch. They're capturing everything that we can't do because we can't really invest in the same way without holding a whole lot of capital, which is interesting and something I want to ask Ted Pick of Morgan Stanley about private markets. How do you get in as a big bank, regulated as a bank, but be profitable in the same way as private equity?
Ted Pick of Morgan Stanley later on this week. Brian Moynihan of Bank of America as well. So we'll be catching up with the whole financial sector through this morning and through the week. Are the regulations getting better for the world of crypto? Let's have that conversation right now with Jeremy Allaire, the co-founder and CEO of Circle. Jeremy, good afternoon.
Thank you. Great to be here.
We mentioned in the previous segment, and I don't know if you heard this, so I'll repeat it again. Do you remember when crypto and everything you do was like the rebel child of finance, and now it just feels like institutional? Is that a good thing?
Well, I do think it's a good thing in the sense that, you know, when we set out to do what we're doing over 10 years ago, I think the vision was that you could integrate the traditional financial system with this new technology, and that this new technology could really change the possibilities for how money moved in the world and how different types of financial services could work. And the only way to do that is by connecting them together, doing it in a regulatory compliant way. There's obviously different dimensions of this industry, and so there's certainly a part of the industry that, you know, seeks to have nothing to do with the traditional financial industry or governments or anything like that. And I think the mainstream phase of this is one in which you've brought together, you know, regulation, traditional finance, and, you know, blockchain technology, and, you know, leading crypto players that can kind of connect those worlds together.
Talking about institutionalization, Bitcoin ETF, we just saw it approved. You were just talking about that. Does that make your job easier or harder as you try to get people to adapt to stable coins, which are different when everyone associates crypto with Bitcoin?
It makes it easier, and I think a couple ways to think about that. The first is that, you know, this is a watershed moment. You have signaling from, you know, all the major participants in the financial sector, the exchanges, the biggest trading houses, you know, the biggest asset managers, that they're moving into this space, and that's a kind of validation. And I think to the average, whether it be person or institution or large internet firm, this sends a signal that this is now connecting to the global financial system. And I think people will begin to say, okay, what are the killer apps of this? What are the killer technologies of this? And there's no question that the killer app of blockchains today are stablecoins. And so I think it leads more people into that path of discovery, and it leads you know, more people to begin actively trying to apply this technology. And so that's really very positive for us.
So is this the perfect moment to do an initial public offering?
I mean, I can't comment, obviously, on any kind of regulatory filings. We've always said we want to build one of the most trusted, transparent, compliant companies in the world, and ultimately becoming a U.S.-listed public company is part of that strategy. But I can't make any comments about any specific filings.
Is there a sense, though, of a timeline and evaluation that you would be targeting?
Again, I can't make any comments.
I can sense the hesitancy, so how about we frame it a third way? You tried to go public before. What's changed in the last year or so between then and now? How different is your company? What kind of position are you in versus previously?
Well, I can certainly talk about the evolution of the space and the company as well. I think, you know, our business, the USDC business, you know, went through a period of very significant growth, and we've gone through a lot of growth in terms of its economic potential for us. And we just came out this week with the State of the USDC Economy report for 2024, and it's an incredible story about hugely increasing types of applications of USDC in international applications, organizations, major fintech and payments and financial companies that are connecting and using this. And so we're seeing this tremendous international expansion and progress, and we're seeing that USDC is in fact the least speculatively used digital currency that's out there. And so that's really tremendous progress, and that progress has happened significantly over the past couple of years, despite the turmoil.
Well, but to talk about the turmoil, I mean, how important is it? You have talked about regulation, the importance of getting regulation. How important is it to have things like audits to understand just how much capital people have put behind coins that are supposed to be pegged to, say, the dollar?
It's critical, and that's why from the very inception we always provided, public accounting firms attestations to the reserves. And in fact, today, in partnership with BlackRock, the Circle Reserve Fund is in fact an SEC registered fund structure that has daily transparency into all of the instruments underlying about 90% of the USDC reserve. So there is that transparency, and there is that kind of more and more protections around that. That's being codified into laws around the world, meaning regulators everywhere are saying you have to have these reserves, you have to have these audits, you have to have the relevant kind of anti-money laundering, all of those things. So I think the model we've developed is also becoming a norm around the world with regulators.
Jeremy, appreciate the update. And to those of you at home following this conversation, if you want the cheat guide, if you bump into Jeremy in Davos, Switzerland, don't ask about the IPO, ask about the party. Because crypto parties, people are talking about no money in crypto. The crypto parties are where it's at this week, big time.
That's always, it's been that way for a couple of years.
I think there's still money circulating.
Exactly. You could get the sense that there still is quite a bit of muscle and DJs and all sorts of other things.
Yeah, just a bit.
Question of cool, too.
You've got to sort out the invites, Bramo. Jeremy, this was great. It's good to see you.
Cheers.
Jeremy Allaire there of Circle. Plenty going on at the World Economic Forum. Here's another conversation for you. Ruth Porat, the Alphabet CFO, speaking with David Rubenstein of the Carlyle Group at Bloomberg House in Davos.
When the great meltdown, the great financial crisis of 07-08 occurred, and it is said that people thought that Morgan Stanley and Goldman Sachs and everybody else was going to go under. Were you living through that, and did you actually think Morgan Stanley was going to make it at that time?
There were days I did not. It was bad. So I was running financial institutions banking at the time, and probably the most meaningful part of my career was when Hank Paulson called and said, I need advice, I need some bankers here. And so I went to and led a team that worked on Fannie Freddie and then AIG, and those were very, very challenging days. And coming out of it, we did Fannie Freddie, and then we did AIG, put them into conservatorship. And I got to Morgan Stanley. John Mack was CEO at the time, and he said, okay, you're in charge of liquidity, figure out liquidity. And of course, days before what very much was running out of liquidity, there was no way to get liquidity. In fact, one day we were trying to figure out what to do, and I was on the trading floor, and I'm like, can we maybe sell the chairs? There were Herman Miller chairs. I thought that might be a solution. That was supposed to be funny, but it was actually really scary at the time. So no, it was hard, but we did this whole series of different teams, and it worked. MUFG came in. They were an incredible partner. The government came in. We became a Fed-regulated bank, but there were some very scary times and a lot of important lessons.
One of the big challenges was that Mitsubishi agreed to invest at, let's say, $23
That was Alphabet CFO Ruth Porat speaking with David Rubenstein at the Bloomberg House event in Davos. You can watch more of that conversation when we upload it to Bloomberg.com, and for Bloomberg Terminal users, you can find that at Live Go. AI, big feature this week.
Yeah, what are they saying definitively, though, other than we want to own it, we want to capitalize on it, it's going to change the world, stay tuned.
I spoke to the NYSE president this morning about confronting an era of misinformation and how difficult that's going to be for capital markets. We'll catch up with Lynn Martin later this week. Up next on the program, Libby Cantrell of PIMCO on Donald Trump's big win in Iowa.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
We're
operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. New time starts Monday. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action at a new time, 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
The big risk, I think, for markets is that inflation effectively gets stuck.
We are getting inflation prints that are a bit hot.
We know the consumer at some point is going to get squeezed a little bit, so that risk-off component is in there.
You run the fine line of potentially keeping inflation underpinned at a trajectory that's uncomfortable if policy, if psychology doesn't moderate a bit.
This notion that immaculate disinflation is going to continue is something that I find very hard to reconcile with actual data.
This is Bloomberg Surveillance, live from the World Economic Forum in Davos.
Lisa made the rules. It is good afternoon. It is not good morning. Live from Davos, Switzerland for our audience worldwide. Good afternoon. Good afternoon. This is